Doing business globally, agility matters. But often, cross-border payment complexities can hold you back. Meet IBAN First, the new standard for your cross-border transactions. With IBAN First, enter a world where a single click is all it takes to open one or multiple currency accounts. A world where making international payments is fast and hassle-free every single time, and with no hidden fees. What's more, both you and your beneficiary can follow your funds every step of the way. With IBAN First, enter a world where one single platform puts you in complete control. Easily manage your currency accounts, FX conversions, payments, and everything in between online. Seize every opportunity with real-time access to the foreign exchange market and keep currency fluctuations in check with tailored FX risk management solutions. Need help? Our team of foreign exchange experts is here to provide hands-on support whenever you need it. This is our promise to you as your trusted partner beyond borders. Join thousands of small multinationals powered by IBAN First. Request your free account today.
Bună dimineața tuturor! Haideți să ne încurajăm să aplaudăm această conferință. CEE Business Summit 2024. I will switch in English. Please welcome everybody at this conference, CEE Business Summit. It's organized and thank you very much for this opportunity to IBAN First. You see the first clip of IBAN First. So this conference for the fourth edition, it's organized by P2PR and Ziarul Financiar. P2PR is a communication company. Ziarul Financiar is the main business platform for news in Romanian. And with the help of IBAN First, we try to see what is the context in this region. This conference is recorded and live transmission through ZF.ro and Facebook ZF. And for the next hour, we'll try to see what is the new life for us, for you, as a businessman, as an entrepreneur, as a founder, and how we can navigate in this new world. In the new world with the war, inflation, currency volatility, geopolitical risk, trade war, new fight, new political bloc, and our main question is what will be the future for our region. Today we'll put some question in this context and try to have some answer. I'll be the AMCN moderator, and with the help of Veronica Denizova from Bloomberg TV Bulgaria, we will be the moderator of this conference. So, please welcome to Pierre-Antoine Dussoulier, founder and CEO IBAN First. Let's applaud him. Make international trade great again. Yeah, what a great title. Okay, Pierre-Antoine, please welcome.
Okay, thank you, Christian. Buna, everybody. And first, I wanted also to thank you, Mirela Pitou, for the organization, because it's the third time I'm coming to this event, and it's always very well organized. I want to thank you also, Anin Latou, who is our CEO for Romania. And then I would like to tell you our slogan at IBAN First, because there is something we say, and it's something in what we believe, really. It's make international great again. And because, you know, we were very sad to see everything was happening with the tariff. And we think when countries and companies are doing trading together, they are buying goods between countries. When you are doing business with another country, you can't do a war with another country with who you are doing business with. So we really believe in that, and we really believe it's important to help companies to do international business. And everything we do at IBAN First is that, actually. It's helping companies, and actually our client, we are calling them SMM, so it's small and medium multinational. So we are helping our clients, those SMM, to do business everywhere in the world. And how we do that? We provide a platform with a lot of features, a lot of things that are helping you to do trades, to follow the transaction you are doing, and also to have a very good price on every transaction you are doing. And actually, so I'm very proud of that. And I'm very proud because what I see is that those clients that we are helping, you, the people that are doing trades everywhere, also you are very agile, is what we see. And the reason why, at the end, I'm very optimistic also for the future, and I think we will see it later during the talks. But I'm very optimistic because when I see how our clients are surviving in this current environment with volatility, FX volatility, inflation, war, and a lot of things like this, I think it's okay, and we are going to be okay for the future. So, again, very happy to be here, and also I'm happy because the first guest we have today is one of my ex-colleagues, and I didn't know that he was here this morning. So he's going to talk about FX, and Valentin. Let me introduce Valentin, who was an ex-colleague at Crédit Agricole with me in the past. So So welcome, and happy to listen to you about volatility of FX market. Thank you.
Whoa. Yeah, before you go, and Valentin come, Pierre, can you, some question related to IBAN First. First of all, many people don't know what means IBAN First, okay? So, if you want to say it again, what is IBAN First? 4 years ago, I said IBAN First is a revolution for the companies. And after 4 years, what is the total transaction volume made last year?
Yeah, but now when people are introducing Revolut, they say it's IBAN First. You know, it says the opposite of what you said. So, and no, but so yeah, we thank you for this, and we are doing well. I mean, we have grown a lot now. We have more than 10,000 clients across Europe. All those clients are SMM, so they are not very small companies. They are companies that are trading millions every day. On last year, for example, we made more than 30 billion euro of volume globally. So what we do, so what it means, IBAN First, it doesn't mean IBAN first, so it's not banning something first. So it's an IBAN, it means International Banking Account Number. And the reason why we use this name is because actually we have a very deep integration into the SWIFT system and the SWIFT network. SWIFT is the international system that doing international payment, and this is SWIFT that is providing the IBAN numbers. And actually with us, you can even have your tailor-made IBAN. So if you want to have like your phone number into an IBAN, you can do that with us. And the reason of that is because we have this deep integration into SWIFT.
So you work only for with the companies?
Yeah.
Okay, and in Romanian, the total volume last year was?
I don't know exactly, but I know that 1.4. Thank you. And no, but the Romanian market is very dynamic for us, and we like it because it's really aligned with our values. Because to work with IBAN First is also a question of mindset. So do you want to be to have a fixed mindset and to be part of the old economy, to use old banks? Sorry, but to use old system and not to try to be fast in doing your payment, to have good price and stuff like that. if you have a fixed mindset or old mindset, yeah, you use your old bank. But if you are open to the change and you believe in the future, not in a bank, but then you use IBAN first. And actually, in Romania, and we can see that it's a very dynamic country for us because companies, they really believe in the future. There is a lot of growth in the country, and it's easier here, for example, to have new clients than in Germany, where it's more like old economy, old systems, and so we like the mindset here. And for example, you were talking about Revolut, but also for retail people, and Revolut is very successful in Romania as well for the same reason, because people are smart here, and they want the best system for themselves and for their business.
Okay. And you have a QR code on your table. If you want to put some question, you enter in Slido and put the question for all the speaker, for Pierre, for all the people who will come here. So, Pierre-Antoine, thank you very much. You are most welcome. Valentin Marinov. Haideți să-l aplaudăm, please, welcome.
Good morning from me as well, and thank you very much for a very kind introduction. So I guess you're going to get to hear from the dinosaurs in the banking world, and the one thing they do pay you for is to run the analysis, the results of which I'm going to be sharing with you. So maybe it is the future after all, banking that is. But just waiting for the slides to load so that I'm able to also show you the title of today's presentation. In the meantime, great to be here. It's a unique opportunity, first time for me, really to be able to share with you the views, the thoughts that we have on the currency markets. But I have to also say, given the context, the outlook for the global economy and obviously Central Eastern Europe as part of that. The title of the presentation is Trading Places. It is a pun on the trade war that is going on at present, but also reflects the fact that in many ways the trade war has forced investors, including FX investors, to reassess their views on the US exceptionalism, the dollar, and indeed look for alternatives. And one alternative is depicted, as you can probably see, just standing in front of the dollar, called the euro. So with that out of the way, I wanted to start off by taking a step back and really just to highlight of the fairly interesting past 6 months, really the months since Trump's election victory in November 2024, that has been characterized by very significant increase in policy uncertainty, and up to a point also FX volatility has been in for the ride. And according to the chart on the right, what you are seeing there is indeed a pretty impressive increase in policy uncertainty, exceeding policy uncertainty that we've seen during the dark days of the pandemic, where governments around the world had to implement fairly kind of unusual policies, let's call them this way. And at the center of it all, I have to say there is another chart, which is now to the right on your screen, rather, that one's on the left, was Donald Trump, his administration, and their trading policies. In particular, what the top, sorry, that's left, right? So top left chart is highlighting is indeed our attempt to estimate what the effective tariff rate that the US will be using against its main trading partners should they introduce or indeed implement all the tariffs they threatened with up until now, including the tariffs announced on Liberation Day. And as you can probably tell, it's a discrete jump from almost nothing to about 150 almost % average tariff rate, which is pretty significant and indeed is the basis for that policy uncertainty I was just talking about. So in the following, and from here I'll try to really share with you our thoughts of what is really going to happen, how it is going to impact global trade growth, and obviously what it could mean for central banks and indeed the markets. And I guess starting with the impact of those policies on trade, we have to make some assumptions here. Ever since we had the pleasure of listening to Trump on Liberation Day, where he announced all these very, very aggressive tariffs, what became apparent is that tariffs are negotiating tactic, that Donald Trump and his team will be using those tariffs as means to an end, not really as the ultimate goal. So under our central scenario, it could change, mind you. We do think that tariffs will be going up, but nowhere near to the extent that tariffs were threatened to reach really in April, or indeed the initial announcements would have suggested. Under our central scenario, we essentially think that the average US tariffs that before Trump's second presidency were about 5%, mind you, that includes 20% average tariffs on China, could be potentially reaching 20 or even 30% on average. In the case of tariffs against China, that could be something as high as 50 or even indeed 60% average tariffs. In the case of Europe, where up until now we had average tariffs of about like 5%, things could be heading closer to 10 or indeed 15%. So tariffs are coming, so be warned, and they are likely to have a negative impact. How much of an impact you can see in the chart bottom left, where you have the growth rate of trade volumes that includes global trade volumes, looks at emerging market trade volumes and G10 trade volumes, and have identified an important event in the not-so-recent past, which is Trump's first trade war from 2018-2019. And as you can see, in terms of impact in the years following Trump's first presidency, global trade did suffer. As you probably remember, however, I just told you on the previous slide that policy uncertainty has exceeded levels last seen during the pandemic. Now look at the impact of the pandemic on global trade. It literally disappeared. There was no trade, right? Global growth ground to a halt. Nations were not trading. Are we expecting anything like that? Well, the good news is that we are not expecting that. The bad news is that we may get an impact which may be worse than what we've experienced after the first trade war that Trump initiated in 2018, 2019. So net-net, in summary, tariffs are coming. They're going to have a negative impact, so better brace yourself. It's not going to be a disaster or the disaster it could have been, but still something really worth preparing for. In terms of growth impact, really of those tariffs now that they'll be impacting trade, the expectations are, I have to say, very much inspired by the experience from 2018 and 19, where on the back of slowing global trade, essentially net exports were suffering a lot. Growth did deteriorate quite a bit. But there is an interesting twist in the story for this year, which is also highlighted in the charts at the bottom, where you see growth expectations for different economies in the G10 on the left and obviously Central Eastern Europe on the right. They're designated by their respective currencies. What you see per currency or per economy would be the expected growth rate for this year, 2025. That's the green bars in the chart. They are also accompanied by, I think it's a corporate color, to be honest. Not sure what that color is. I think it's maroonish type of color. But that is the growth that we saw last year. And as you can probably tell, that maybe starting on the far left, where we have the US is essentially expected to slow down quite aggressively, coming from very lofty levels of in excess of 2% to slumping to growth levels of around 1.5% or even lower. What is also quite interesting that essentially everyone else, especially in Europe, is expected to see their growth outlook stabilizing and actually even improving. That in full view of, obviously, the raging global trade war. And why is obviously an interesting question. And we believe, and we subscribe to the view of essentially US slowing, but Europe ultimately mildly accelerating, because Trump policies next to trade also contributed to decisive action on the fiscal front, which is something that, in our view, will continue to prop up domestic demand in Europe in particular. And as a result, you could see, I guess, in the case of the Eurozone, you see that under the Euro, but also in Central and Eastern Europe, we see actually growth stabilizing at fairly decent levels, especially compared to the US. So in a nutshell, and just to reiterate, tariffs are going to deal a fairly negative, very big impact on trade that need not, however, translate into a severe blow to global growth. And if anything, the economy that's going to bear the brunt of the trade war, ironically, would be the US itself. So I guess with that, just wanted to reach the point in the presentation where I wanted to assess the damage done by Trump's policies on the US global economy, and maybe talk a bit about how it could impact the dollar, treasuries, and indeed their appeal as a safe haven or indeed reserve asset. And viewing the impact of the Trump's policies, there are two aspects to it. What you're looking at the moment on the screen is an attempt to assess its cyclical impact. The reason I have this slide up there is because time and time again, whenever you talk to a client, he's going to ask you a question. Is the US heading to a recession? Right? Is essentially the US president pushing his economy into a recession? Will those policies drive us there? And the reasons for that are highlighted by the three charts at the top. Tariffs are tax on consumption, among other things. It means that US consumers now have to pay higher prices for the goods they're importing, higher prices than before. Their real purchasing power is eroded as a result. They have less money to spend. Policy uncertainty also means that companies have to delay investment. CapEx is slowing, that's the chart in the middle. Investment has been falling, more recently has picked up, but it could ultimately continue to slow down as policy uncertainty about how Trump's policies will evolve from here persists. And because tariffs also have an adverse inflation impact, meaning that because of higher import prices, inflation could remain stickier, and because of that, the Fed remains more hawkish. As a result, financial conditions could tighten. And that is quite important if you consider the chart top right, because what you see there is what a credit guy would describe as the refinancing cliff. What happened in the US, as I guess was the case in Europe, companies did use the fact that during the pandemic years, we had super low rates in the global economy, so they borrowed quite a bit, relatively cheaply. That debt is now rolling, 2, 3, 5-year debt, and they need to roll that debt at much less, essentially favorable levels. Corporate costs have grown, and therefore companies may be facing a refinancing cliff. And the amounts you see top right are indeed quite staggering, and this is why people worry that Trump's policies could push the economy into a recession. Our view, and an answer to a question whether a US is heading to a recession, would be no. We think that the US economy is sufficiently resilient, has the strength to withstand that particular shock. As I was already highlighting on the previous slide, we do expect growth to slow down significantly, especially in the first half of this year, but ultimately rebound. And part of the reason is in the charts at the bottom, the fact that so far there is no evidence, literally no evidence, that financial conditions in the US have tightened. Neither in terms of banking financial conditions, which is lending financial conditions, which is the bottom right chart, and as you, bottom left, and as you move to the right, you see that there hasn't been any significant impact from the still restrictive Fed policy on consumer borrowing costs, or in this, firm borrowing costs, mortgage rates, and so on and so forth. Assuming that this remains the case, we think that financial conditions in the US could remain largely supportive, and therefore could ultimately support the economy, so no recession expected as well. Another important reason there, and I'm not going to spend time discussing the US labor market and so on, but another important reason to be more positive on the US would be the upcoming fiscal stimulus in the US, which neatly leads me to my next slide. And just to give you some parameters, and presumably you know all about it already, Donald Trump has first cut personal income taxes back in 2017. That cut was meant to last up until 2025. So the moment he took power last November, his primary objective was to extend the period of those tax cuts, essentially beyond the end of this year, potentially make them indefinite, which from a point of view of the American consumer, right, is not a bad news at all. If anything, if you think of the impact of those same tax cuts introduced in 2017 on the American economy in 2018, that was quite positive. And that is important because in 2018, as mentioned, we had the first trade war. So the tax cuts may well prop up domestic demand and may help the US avoid a recession. But that is as much as really the story is positive, because a lot of what I'm going to tell you from now is actually quite negative. And people like to refer to as the structural damage done by Donald Trump to the US economy. In interest of time and just keeping it moving along, what Donald Trump is trying to do is trying to essentially extend taxes that could cost him close to or more than $4 trillion. The US is about 20 trillion economy. So we're talking about 20%, right, literally, of that being added to the US gross debt over the next 10 years. What is worse, Trump is trying to do that at the potentially worst possible time. US fiscal deficit is 7% of GDP, which is not a record high. We had the pandemic, right, with double-digit fiscal deficit, but certainly comes close. Worse still, borrowing costs, they're heading towards 5%. Worse still, Fed policy rates are not moving. They're stuck at 4.5%, still one of the highest levels in the last 20, 30 years. Even worse, Trump will be trying to sell that debt to US's allies, the same allies that Trump and his cronies have been insulting time and time again. He'll be trying to sell that debt to the US trading partners that at the moment are negotiating tariffs. Worse still, Trump is doing all of that while the tariffs are fueling inflation and making the Fed more hawkish, and as a result, boosting borrowing costs. Well, I guess you would be excused to think that maybe that's not the best time to be certainly planning to boost US debt by such a significant amount, while at the same time you are trying to do your best to antagonize the buyers of that same debt, right? And it doesn't end there. Because on their part, the markets have been speculating, and I would insist that is still largely a speculation, that Trump and his administration will resort to something that came to be known as Mar-a-Lago Accord. The accord has two parts. Part number one, depreciating the dollar by maybe 15, 20%, similar to the Plaza Accord we had in September 1985. The second part would be to force, maybe coerce, or maybe encourage, or convince, rather, the US trading partners and allies to swap their existing debt holdings, their treasuries, into centennial bonds, right, 100-year bonds, and in the process be able to lengthen the maturity of your liability side and therefore lower your borrowing cost. Mind you, this is a speculation, but it doesn't help because it is happening at a time where Trump will be ultimately going cap in hand, asking for more money, and a lot more money. So where is all of that leading to? Well, it is leading to what I call structural change, because what people are now starting to question openly is whether treasuries are still the reserve asset of this world, whether the dollar is the reserve currency of this world. And these are the questions I have to answer essentially on a daily basis. And to start off, I'm going to say that no, I do not think that Trump's policies so far will be dealing such a significant structural damage so that the dollar will lose its safe haven or indeed reserve currency status, or indeed the treasuries will be losing their status as a reserve asset. Just to give you some arguments in favor of that view, the Trump administration is planning regulatory policies or relaxation of policy requirements that will allow US banks, not foreign investors, to absorb a big chunk of the upcoming treasury supply. There is the idea, actually already set into motion, to promote stable coins that, by design, will be big buyers of treasuries. In addition, Mar-a-Lago, I've mentioned that it is a speculation, and that's what it is, because what most clients seem to be referring to when it comes to Mar-a-Lago is a number, I think 17 by my count, of Bloomberg-penned articles that are referring at all times to a piece published by the current chair of the Council of Economic Advisors of the Trump administration, Stephen Mirren, that was written last November, and he wrote that in his function as a hedge fund analyst at Hudson Bay Advisors, where he was essentially speculating what his future boss would do if indeed it comes to reshaping the global financial system. The important thing is that there is no other evidence, or indeed since Trump's inauguration, there is no official indication, to my knowledge, that Trump is indeed planning to debase the dollar, send it plunging, and indeed ultimately ask the willing buyers of the US debt to swap really that holding into like 100-year bonds. Or, as a matter of fact, Scott Bessent, the US Treasury Secretary, was cited on 5 occasions so far this year when he was saying that strong dollar is in the US best interest. So Mar-a-Lago to me it's a nice story, definitely, don't get me wrong. I'm in the business of writing stories myself. It certainly sells well, but there is little substance behind that, at least for now. And this is what I would expect would happen. And then we have the Fed, because I think that if the US, just to give you an idea of the chronology of things, so the current fiscal package, the $4 trillion of it, including the next year's budget, is in the Congress. It has passed the House, as expected. It's heading to the Senate. There will be some adjustments made. The bill could go back to the House as a result and so forth. But the plan is, and I think they're going to stick to that plan, is that by 4th of July, which is essentially a month from now, President Trump will be able to sign this into law. So all the increases in government borrowing are going to hit the markets at some point. But the Fed will have to respond. There is no denying that clients really worry. All that I told you about that, me not believing that treasuries are not going to be considered as safe and so on, doesn't mean that clients do not worry about that. Doesn't mean that clients do not worry about the dollar. So I think that as a minimum, what the Fed will have to do is has to abandon its QT policy, not necessarily switch back to QE, so no end of quantitative tightening, but no beginning of quantitative easing. And what could be a feasible option for the Fed would be to reshuffle the maturity profile of its current existing treasury holdings, selling short-term debt and buying longer-term debt as a way to keep the long end of the treasury yield curve under control. So all I've just done so far is list you at least 4 or 5 reasons why I don't believe that the structural damage that people worry that has been inflicted on the US economy by the Trump administration will materialize anytime soon. And I guess I should also mention very briefly, and I'm conscious of the time ticking away there, I guess you don't see that, that Europe could emerge over time as one of the biggest beneficiaries from all the concerns I was just discussing. On the cyclical side, yes, Europe will be propped up by huge amounts, quite unprecedented, really, of fiscal stimulus. So on the left, you have a list of all the proposed packages and measures. The total amount of the German fiscal stimulus alone is about 1 trillion, admittedly implemented only over a period of 10 years, so it's a fairly long period of time. That will be also complemented by additional packages at the EU levels. They will be mainly targeting defense and infrastructure projects, but we think that over time, and the charts are showing you our estimates of how growth in Germany and France could be impacted as a result of those fiscal measures, really that will help Europe really withstand the trade war. This is the reason why we expect really the Eurozone economy to actually accelerate going into next year and continue to grow at a healthy clip, partly on the back of that stimulus. The question is also regarding the role of the euro as a potential replacement for the dollar as a safe haven. Here, I have to say I'm slightly less optimistic overall. And just very briefly, to have a euro vying for the title of a reserve currency of the world, you have to have fiscal union. There is no way around it. However you look at the treasury market, how much you may dislike it, Europe doesn't really have any viable, credible alternative at the moment. Even the largest of the EGB markets, the BTP market, it is about 3 trillion. The treasury market is in excess of $10 trillion. And just by the sheer virtue of its size, the treasury market is still the go-to place or the provider of liquidity that many people will continue to use. So overall, the development so far could be quite positive for the euro, but ultimately there is a limit to which the currency could benefit from all that. Maybe just very briefly towards the end of the presentation, just want to give you an idea of what this all means in our view for, I guess, the different central banks that we are focusing on, and maybe share some final thoughts on the dollar from here. In particular, starting on the left, I have this table, which I do admit does contain quite a lot of less useful information, at least for this particular venue. But the point is that what you see there is a snapshot of OIS curves per currency, starting with the euro, then going down to the dollar, and so on. So essentially what it helps me is to tell you, to show you rather, what the markets are expecting policy rates will be at present, year-end 2025, 2026, and so on and so forth. And cutting long story short, starting with the ECB and the euro, the markets at the moment are expecting potentially another 3 rate cuts, really, policy rates reaching 1.5%, really at some point in 2025 before recovering really towards 1.60 or whatever 160 basis points towards the end of 2025. We as a bank disagree with the view to the point that we think that the resilience of the Eurozone economy and the fact that rates have reached their neutral territory, ECB rates, would mean that maybe we could see another rate cut to 2%, which would be next week, followed by another one, and that is essentially the end of it. So 175 is the level that we foresee for European rates. What will be interesting to see really is whether the ECB, similar to the Fed now, will have to reconsider its balance sheet policies, especially if the huge increase in German supply, I guess supply from other economies that are still running pretty hefty fiscal deficits in their own right, whether that may force them to adopt measures similar to the Fed, whereby they're going to try to anchor the long end of the EGB yield curve. It is not out of the question, but not for this year. The Fed, which is essentially the second row going top to bottom in the chart, I have to say that the markets have been really for a wild ride, really so far this year, with the markets pricing in recession at one point in the US. As you probably know, the OIS curve for the US has been pricing in as many as 5 rate cuts this year. Now we are back to the much more, I guess, agreeable 2 or so rate cuts, which would be also consistent with our view at the moment. Where we disagree with the market, so essentially 2 rate cuts from the Fed from current levels, pushing rates down to 4% in the US. Where we disagree with the markets at the moment is the view for 2026. I've already mentioned that we doubt that the US is heading for a recession, but we also believe that, in part, thanks to the fiscal stimulus that people are choosing to ignore at the moment, the US could rebound fairly sharply, strongly next year. And as a result, we think that the Fed into 2026 may have to consider its options. In other words, we do not expect any meaningful easing into really 2026 as a result. So we think that rates wouldn't be heading significantly lower following the 2 rate cuts later in the year. So what does it leave the banks in Central and Eastern Europe? I hope you can appreciate the fact that these are added as bullets in the bottom right side of the slide. Maybe starting with Romania, and we've been discussing that last night, a very interesting discussion indeed. I guess the central bank, I mean, it's not an official dual objective, but moves of the rates on the rate side are always taken whilst considering what the currency is doing. And obviously, given the more recent political developments, the currency volatility that they've resulted into could suggest that as a minimum, the central banks will likely want to continue to support the currency by not really responding to any renewed weakness in the economy. So as a result, we expect stable rates from current levels. We also think, however, that as a result of that, delay will be ultimately able to recoup recent losses, especially as we would expect political risks here continue to abate. I should also mention that in this respect, Hungary is in a fairly similar position, in part because currency instability, or rather volatility, could continue to force the central bank there to be quite cautious, really cutting rates. At the same time, compared to obviously Hungary and Romania, both Poland and the Czech Republic have ample opportunity to ease further, so essentially follow in the footsteps of the ECB. And I guess one lesson learned from the discussion so far, especially Central Eastern Europe, is that currency volatility or financial stability considerations more broadly are quite a part of the policy considerations when it comes to rates. So central banks with more volatile currencies are ultimately forced to maintain more restrictive or to adopt a more restrictive monetary policy stance, and even though, or potentially despite the fact, the economy may be needing slightly easier monetary policy stance overall. And final word really on the dollar, just wanted to highlight, as you've probably guessed by now, just as a way of summarizing what I was saying, I believe that the main impact of Trump's policy has been through essentially making people worried about how the US economy is going to do, whether there will be a recession in the US. And I already told you that I disagree with the view. I don't think that the US is heading for a recession. And I'm also not trying to be very dismissive of the concerns about the structural damage that the Trump policy could be inflicting on the US, but I also don't want to overplay it. This is why I think that the cyclical argument as a driver of the dollar will remain paramount. There is no better way to highlight what this means for the currency than looking at the chart top right, which is essentially showing you the dollar index across the board overlaid with its rate and yield advantage across the board. And it tells an interesting story, especially if you look back till the start of this year. The Trump policies did fuel recession concerns, did make a lot of people worry, including myself, and that did mean that people went overboard pricing in Fed cuts. As a result, the dollar lost a lot of its rate appeal, so that the dollar started moving down in tandem with its shrinking rate advantage and yield advantage. But since then, since that fateful meeting in Geneva between the US and Chinese officials, for example, where actually people started talking about de-escalating trade tensions, started talking about the fact that tariffs are a negotiating tactic and so on, the dollar's rate appeal started going back up again. As a matter of fact, the rate differential between euro and dollar has moved to such a level, or actually rather sunk, because it's euro versus the dollar, that a fair value based on that alone would suggest that euro should be at 109, 110, not 115, not 120. And if you believe, as I do, that the cyclical story is the dominant one, and that concerns about the dollar's reserve currency status, Mar-a-Lago, and all of that will ultimately obey, that should mean that over time, the dollar should be able to stabilize and even regain ground. In our forecast for the dollar, we think that will happen next year, because for this to happen, you also need to have equity investors, FDI, heading back to the US, which could happen if we are correct, and the US economy does turn a corner and starts recovering into 2026. So as I was saying, in terms of euro-dollar, I think we are close to topping out, essentially 115, 116. We don't think that 120 will come anytime soon, but ultimately the longer-term outlook from current levels even could be still moderately bearish. Maybe final slide, and I do apologize for taking so much of your time, but given the timing and obviously where we are at the moment, have to mention really the euro adoption, potential adoption in Bulgaria, which is not that far off, it seems. And I guess all eyes will be on the Commission report about the progress made so far, and the expectation in that would be essentially that there'll be a recommendation really for Bulgaria to be joining the expanding European family. And I should mention that clearly that is that decision, at least as far as I'm concerned, would be certainly paving the way to certain further positives down the road, both in terms of improving growth prospects, increasing FDI, increasing portfolio investment, and more broadly, really greater prosperity, or indeed you could even argue it is the next natural step of integrating into the expanded European family. And I was asked on a number of occasions whether that could mean what it could mean for the region as a whole. Should we expect other countries to follow suit, especially given that, let's face it, following the kind of a joining of, I guess the last one to join was some of the Baltics. I think Latvia joined in 2015. And then obviously we had Croatia in 2023. The pace of expansion of the Eurozone, which is the blue region and that European map you see there, has slowed down quite considerably indeed. So I had Croatia and potentially Bulgaria January next year as well. Where do we go from here? And I have to say that my personal view, again, would be that, just judging from feedback, that there's not huge appetite for Euro membership among the rest. Potentially, you could argue that the Czech Republic, given its integration, literally, with the German economy through vertically integrated supply chain, exports and so on, and the stable exchange rate, could be potentially next in the line. But I would like to think that, assuming a successful or indeed positive experience that Bulgaria may have in the coming years, and would ultimately could serve as a template really for other economies, that could also shift the sentiment here in Romania, even though I kind of, what I sense, it's slightly, I may be wrong on that one. But with that, I just wanted to finish. Thank you very much for your attention, and happy to pass it on to whoever is on after me. Thank you very much.
Thank you very much for your present. You have a presentation. You have a question. What Eurozone risk arise from the US refinancing and tighter credit?
Well, clearly, I mean, there are positives and there are negatives to that. There's likely to be some contagion, especially given the refinancing risk. What is quite interesting in that is that a lot of US companies have been coming over to Europe to overcome the issue with higher borrowing costs. The series to monitor in this respect would be the so-called reverse Yankees. I don't know if you've heard of. Essentially, it is really just dollar bonds or euro bonds issued by Yankees, by US corporates. As part of the issuance, they essentially get the issue, they swap it into dollars, and then down the road, they get into transactions to swap dollars into euros to pay the outstanding coupon payments. But because of that, clearly, because of the amounts involved since the start of the year, that will likely push up corporate borrowing costs in Europe as well. It is the case that banks, I guess dinosaurs, really are still profit maximizing institutions, and we go after the better really offer there in terms of demand. But definitely, I guess on the that's the negative side. On the positive side, I should also mention that Europe still has more favorable financing conditions, which I think compared to the US could over time really be seen as stimulating growth more strongly than really the conditions are in the US. The fact that the euro has strengthened so much, for example, is disinflationary and could allow the ECB to cut rates more aggressively than the Fed. The Eurozone is not facing stagflation as the stagflation risks as the US is at the moment, and that also is conducive to more favorable financial conditions and therefore stronger growth down the road.
Another question, you mentioned that you don't think that the United States will enter in the recession. You mentioned that Europe will be the main beneficiary with what happened in the United States. Will be a huge fiscal package. What about our zone? What do you think will be the future?
Well, I mean, just going back to, well, I don't have the slides anymore, but definitely, I mean, in terms of growth expectations, growth is expected to remain well above the Eurozone average and actually improve in some cases. It is the case that really what the biggest positive for the region would come from the actually two things, right? So one is the fiscal package, which is announced at the EU level, which will be supportive for defense infrastructure, and ultimately that should prop up growth. That fiscal package is not going to be limited to Germany only. It is the case that a lot of the economies here are part of vertically integrated supply chains and essentially are integrated as a result into the broader EU economy. So anything that is positive for that economy will be positive for those economies. But you have to view it into the context of the global trade war. Clearly, because of the same vertically integrated supply chains that will hit the German economy, will hit the French economy, it is also likely to hit the economies here. So it's really a balancing act. So they're both positives and negatives. But our conclusion is that growth is likely to remain fairly buoyant. And I think that coupled with easing financial conditions, maybe to countries like Bulgaria that are more kind of deeply integrated with the, I guess, European central banks, kind of what the ECB is doing, those conditions could become even more favorable from here. So certainly stay cautious, but we are not facing a disaster.
Do you think it's enough money in the market for the needs of United States, the needs of Europe? Because all this bloc now move to the fiscal policy.
Yeah, that's, I have to say, a fairly difficult question. But let me start off by saying this. So what will happen, right? And where Euro could really shine is the fact that the US will be issuing a lot of debt, and unfortunate for the US, really, current account deficit, fiscal deficit, all of that suggests that they don't have the money to pay for that debt, so they need to borrow it from someone else. And as luck may have it, I'm being sarcastic here, the Europeans are doing the exact same thing. They're also trying to borrow quite a lot. The difference between Europe and the US is that the Europeans, they do have a lot of excess savings that have been investing into US debt. So as a result, there will be a competition for that cash, for European savers' money that is sitting in the US at the moment. According to some estimates, the total amount of long-term US assets held by EU is about 8.5 trillion as of December last year. Just as a comparison, the Eurozone size of the economy is about 10 trillion. So essentially all your savings are somewhere there, helping to fund US debt, right? So, and because of the scarcity of savings, you'd argue that at least some of that money is going to leave the US and come over to Europe. But from that point of view, and with that scarcity in mind, Europe is arguably going to be in a better position, just because the starting position is you have savings, net savings, that you have to obviously rebalance away from the US and bring over here. Whereas in the case of the US, and this is the whole narrative about Mar-a-Lago and indeed structural damage and indeed how the US will be struggling under that debt, I think it could be quite important. Two things, as I was saying. One is the regulatory changes, which will allow US banks to now load up on dollar debt without really that impacting their risk weighting. So it was a measure that was introduced after Lehman and essentially meant to restrict buying of treasuries by US banks, and Scott Bessent now is easing that. The other idea is to have more stable coins, which is essentially the gateway between the your usual traditional world and the crypto world, which also involves more buying of treasuries, but ultimately there's no way around the Fed. I think the Fed may well have to emerge as one of the buyers of that paper. So essentially they need to create some more money, right? So, I mean, I hope that.
If United States needs money, Europe needs money, what money will be left on this region and at what cost?
Okay, another excellent question, and I have to say there's going to be a lot of competition. I mean, the biggest risk to any, starting with the Eurozone view, is that if all of a sudden your benchmark, which is the bond yield, right, starts growing because of that strong issuance, the domestic spending in Germany, that is likely to lift everyone's borrowing costs, right? So Italy is trading at the moment at 100 basis points. BTP bond yield spread is 100 basis points, been drifting lower. And people are saying it's because bond yields are converging. But it is the case that I don't think that BTPs will ever trade through bonds, right? So it is the case that as the Germans spend more with the rebalancing and everything, the increase in supply versus demand will lift everyone's borrowing costs. And I guess the only way for Central Eastern Europe to continue to attract that investment certainly would be by following suit. So it's not the great news. Hopefully all of that is going to come against the backdrop of resilient growth, so not necessarily such a bad thing. But this is also where being part of the Eurozone could help a lot, just because as a minimum, you do not have a currency risk to kind of deal with really when you're trying to pitch, when you try to attract buyers of your own debt, especially if the money gets scarcer and scarcer. So I think that against this backdrop, being part of the Eurozone is a big advantage in the current environment. But to your point, money is going to get scarcer, right? So you have to be really very convincing, I'm afraid, yeah.
A question for the public. What do you think about HOOF? Again above 415, or can gain against euro and be more stable around 400?
Yeah, I believe I mentioned that in my remarks. Indeed, it's similar to the situation in Romania. I mean, the currency really fluctuations are playing a huge role as a driver of the central bank policy outlook. And from that point of view, indeed, we believe that there is a scope for stability for the currency over time, but this is going to come at the price of relatively high policy rates in the economy. Obviously, the currency is certainly disadvantaged by weak external imbalances. We have current account deficit, we have trade deficit, and so on, which is not great news for any currency. And I guess in the case of the Hungary, right, we also have that added layer of geopolitical uncertainty given the stance of the Hungarian government or a number of issues, and obviously all the drama around their voting rights now in the European Parliament, and so on and so forth. So none of that helps. And I guess as a result, the currency suffers and it lags behind others. And I guess on the domestic side, that results in kind of a more restrictive than it has to be monetary policy, which is not great for growth. So stability, but it's going to come at a price. Yeah.
Okay.
Yeah.
So let's applaud Valentin for this presentation. Thank you very much. Before I pass to Veronica Denisova from Bloomberg TV Bulgaria, Pierre, you have 2 questions. Are you a Trump economics fan? Because you practically use his slogan for your IBAN first presentation. Okay, you'll answer the question. And the second one, do you think IBAN first can become market leader in 5 to 7 years? So, Valentina. Veronica, sorry, please welcome.
Good morning and welcome. Thank you for being here at the CEE Business Summit. I'm really happy to be here again for a second year. It's a pleasure for me. And without further ado, I will introduce the speakers in this panel. They are really esteemed and meaningful speakers. Pierre-Antoine Dussulier, founder and CEO of IBAN First, who you already know. And Elena Marinova, tech entrepreneur and co-founder of Musawasoft, of eJoy and IO AI. Thank you. At the beginning, just let's set the stage as we think about the opportunities and risks of operating across borders. I'd like to begin by asking both of you to reflect to your own journeys. And Pierre-Antoine, IBAN First has expanded across Europe, bridging Western and Eastern markets for more than 3 years now. What were the key factors in your decision to continue reinforcing your positioning in the Eastern Europe region?
Thank you. I think I said it a little bit before. It's like the mindset of the region, and here there is a growth mindset. People want to develop companies. They want to grow. They believe in the future, and so it's very dynamic region for us. And what I think what is interesting, and also it's interesting when I say to my friends that we are investing in the region, very often they say, you are using the region to externalize some service for Western Europe. And I say, no, it's not what I do. Actually, my clients are Eastern Europe companies. So our clients are Romanian companies, Hungarian companies, or Bulgarian companies. So and it's working, and it's working very well. There is more growth here than, again, in France, Italy, Spain, Germany. So for us, it's a mega opportunity.
Why is that so? Why is there more growth here?
I think more young people, more, again, and again, there is also another aspect, actually, which is interesting for us. It's actually, here, you are part of the European zone. So actually, we have one license. We have two licenses at IBAN First. One license for the UK and one license for continental Europe. Since the Brexit, we were obliged to have those two licenses. And with the license in Belgium, actually, we can do business everywhere in Europe. It means that we can do business, again, in Germany, France, and Italy, Spain, but we can also do business here. And what is interesting, actually, is that here you are near like other countries where you need more FX transactions. So actually, there are more SME doing business, for example, with Turkey, with Czech Republic, with Hungary. I mean, everybody's doing business together. So it's very dynamic. And actually, our service are very useful for the SME of the region. If I take the example of an SME in Germany, it's often the guy is going to say, yeah, I'm doing business, international business, but it means for them, for example, I do business with France. Doing business with France and Germany, it's quite easy because it's like euro to euro transaction. Here it's more complex, so the company needs a better service because they have more complexity to tagger for the region. So, and the reason why actually our service is successful because we are really helping the SME of the region.
And Elena, as a co-founder of Musawasoft, recently acquired by one of the largest software companies in Europe, QueenShift, you've navigated the journey of expanding an Eastern European company into Western markets. What are the biggest challenges you faced and a company from the East facing when entering the West markets?
So just again to set the stage, we founded Musawasoft in 2000, so it's been 25 years journey. And we sold the company 2 years ago. I completely exited last year, and I'm now investing in a lot of other different stuff and involved in many philanthropic initiatives, just as a quick, brief intro. And as for the challenges of expanding from the region to abroad, we actually started our business in US. So we were from the very beginning a Bulgarian headquartered company, but our first clients were in the US. Then we expanded in Western Europe, and just after that we started doing business in Bulgaria. So it was totally the opposite of start locally, test your services and products, and then expand on the global markets. And I think maybe that was exception before when we started, but currently I think that can easily be the path to go if you decide to do so. Because the world is much more connected, it's much more easier, despite the tariffs and everything that we heard, the threatening things from the first presentation. Still, it is much more easier now to be a global company than it was 25 years ago.
But isn't it a little bit more difficult entering the US market right now with the current political situation?
You know, that's and that's one of the prejudices that we have for ourselves, that because we come from this region, people will think of us differently. And that might be the case, but it's much more a self-fulfilling prophecy than the righteous fact, because at the end of the day, when you go on the global market, then you play a global game against global actors. And the market is much more interested in the value that you present to the market than from where you come from. So I think, yeah, now and then, just now Trump and the limits and everything, but at the end of the day, it's about the value that you create, and the market will very soon value the value, not where you come from.
In your example, you really skipped some of the steps expanding to the Western markets, but balancing scalability with local adaptation, how do you approach it when entering new regions?
So, okay, we did not skip, we just did it a different way, which is totally okay. And to your question, if I can slightly switch it to how you, in general, enter new locations, because in our case, it was entering Bulgaria from Bulgaria, and it was totally different than working on the US or the Western European, especially the German market, which was a big market for us then. And when you enter in a new location, you have to be cautious of the business environment, the culture, the competition there. So all these factors, and it's not totally different. It's the same basic principles, where whether you go from east to west, from west to east, or wherever you go, you just have to know what is the environment at the place where you enter and start doing business. Many people say you have to have a local partner. In our case, we are software services business, and from what we saw from our experience and also from the experience of our colleagues, in most of the cases, actually, companies failed to find a good local partner, and for us, it was always working from Bulgaria, exporting to the world. We never had business development on site in these markets, which I guess is against the logic, but that's the way it worked for us.
And Pierre-Antoine, how do you approach new markets? Do you seek for a local partner or another strategy?
And so, again, thanks to European Union, with one license in one country, you can do business everywhere. So it's really good for us, and actually for Europe. Also, I mean, I can give you the recipe that we have, so it's quite easy. So we are investing a lot in the technology infrastructure, because the technology is helping us to give some scalability of the business. So by having a strong technology that you can deploy everywhere, you can be easily everywhere. And then this is the first part of strong tech to give scalability. And the second part is actually to have local teams. So it's how we do it. So local team with local people. So in Italy, all our team is Italian. There are no French or other nationalities. Here in Romania, the team is from Romania and understand the local market. So it's like having global technology with local team. It's how we do this, how we scale everywhere.
So tech infrastructure investments and with AI and fintech reshaping global industries, how do you see technology driving new global trade opportunities? What's the role of technology?
Technology is everywhere, and you know, so it's interesting to talk about AI also, because now, and I can tell you what we do with AI at IBAN First. And we do plenty of things, but for example, we do things for our clients that are very interesting. And what we see is that we are involved in payment, on cross-border payment. On doing payment for a CFO or a CEO is not something funny. In the morning, when the CFO is connecting to his online banking, thinking about doing payments is not the best part of his day, because it's something that should be done in a simple way. So with AI, actually, we have automated a lot of things to help our clients to facilitate those transactions. I can give you one example. The example is that myself, I've got very good assistant called Berenice. She's fabulous. She's not here today, but she helped me to book everything and to do actually my own payment. So I was thinking it would be great if our client could have a Berenice as well. And so we invented an AI agent called Berenice. So actually, yeah, she's not happy, but my own Berenice, she said, "Are you sure?" I say, "Okay." I say, "Yeah." Yeah. So now our client can connect with Berenice through WhatsApp or through email and send, for example, a bill. That you just take a picture of a bill you want to pay. You send it on WhatsApp and you say, "I want to pay this bill in euro, in dollar," and then you have an immediate reply saying, "Yeah, this is the payment instruction has been coded into the platform. Are you validating this is what you want to do for real?" And you reply yes if it's correct. If the exchange rate is correct and everything is correct, you reply yes, and then the payment is done. So it's very easy with AI, for example, to do a payment like this. And it's the kind of things we do through AI to help our clients to facilitate their payment. So yeah.
And maybe Elena, you would tell us more about IO AI.
Yeah, that's in the context of AI. So IOI stands for the International Olympiad in Artificial Intelligence, which we founded last year in Bulgaria. This year it will be in China, and we're going around the world, which is gathering together the smartest kids in the world in AI. But one of the other things that we started as a line for this Olympiad was empowering and engaging and inspiring more kids around the globe to be interested in AI. And in this process, what we found out, of course, kids are curious, but we saw that governments, international organizations, businesses, educational institutions, surprisingly, think kids are not as ready as I believe they are. And why we're talking about kids, why I'm talking about kids, because at the end of the day, these are your clients just tomorrow, and that's the generation that will be driving the business at the end of the day. So AI, I think it's here. I think it's a powerful instrument. I think nothing can stop it. I think it's a valuable assistant. By all means, and I think it's only positive as long as we are aware and control the ethical and moral aspects of it.
Could there be a successful international company that does not invest heavily in technological solutions?
No.
So tech should be in the core business from the beginning.
It can be in the business for sure. I mean, you may be a hairdresser, and then obviously that's not in your core business, at least not in the foreseeable future. But you have to use technology to help you in like everything in your business. So no way, absolutely.
Going back to the trade policies and the trade barriers, have they directly impacted your business, Pierre-Antoine?
Yeah, and it was very interesting to see the presentation from Valentine before, because yes, it had a huge impact in Q1. We saw the volatility of euro-dollar being at its top level ever. So the movement we saw in March and April was the biggest movement on euro-dollar on a short period of time that we never ever seen in the past. And it had a lot of consequence for our clients, because our clients, so they are buying dollar very often. So when they are buying dollar and they see the euro going up very fast, actually it can be a good opportunity, because then it means that it's becoming cheaper to buy dollar. So directly for IBAN First, it was very extremely positive beginning of the year. We have actually opened like more than 1,000 accounts in Q1, and also it was record months for us, and actually we are very happy because we help a lot of clients to hedge themselves on euro-dollar. So yes, so those movements actually on volatility in the market is positive for us. When we can help our client to hedge, it's good for the client as well. So.
Let us simplify what is a barrier. It's a barrier, so it's a stopper. So who's benefiting from the barriers in general? It is the companies that are solid, that are bigger in general. They benefit because there is barrier to entry to their field. Who is not benefiting are the small companies that still cannot adapt, that are not strong enough to adapt. So the startup ecosystem is definitely not benefiting from barriers. You asked earlier, would it be a good time now for a startup, a small company to enter the US? No, internationally. That means more business for the bigger companies, which can manage that. And there is a third group of companies that can benefit from barriers because they are in this niche of building their business because of the barriers, no matter what barriers. So that's quite a general but very, very true thing about barriers.
Yeah, I agree with you, but I think also, some of the SME are very agile also, so actually they can not benefit, but they can, if they are smart, they can be able to not to suffer too much about those barriers. And again, it's the reason why we are talking about making international great again, because we believe that companies that are doing international business, they are smart companies, they are agile, and even with barrier, which is not a good news for them, they will be able at the end to succeed anyway. So
actually what you're doing, you're easing the pain on these small companies that are not fit for these barriers, which is great. That's a great thing you're doing. Yeah.
And maybe Pierre-Antoine, here's the place to ask one of the questions from the audience. Are you a Trump economics fan? Because you practically use his slogan for your IBAN's first presentation.
Yeah, no, but it was actually we use it, but in opposition of, because really we believe in this, and we believe that if you're doing business between countries, actually, if you are trading something between two countries, you don't want to make war with another country. So, you don't want to make war with one of your partners. So actually, at the end, we think barriers are very bad, and we think really it's really important to do business between the countries, because if you do business with China, you don't fight with China, and if suddenly you can't do any more business with China, you are going to be suspicious about China, and probably at the end you will say, well, why not? They are enemies, and why not going to work with China? So it's, we prefer when business are doing business together, and we are happy to help them to help companies that are dealing internationally. So.
Just in support to that, war is not good. Although we saw here in the numbers that one of the boosters of the European economy especially will be the defense spending, which is triggered by the war. But in general, for the business, other than the military part, the war is giving instability and unpredictability, and that's not good for any long-term business with a substance in it.
But does this uncertain environment slow down or push innovation forward?
I think, it depends. Again, if you're agile, it's pushing innovation. So, I mean, it's in every moment like this, there will be some winners and losers, and the most agile company will be winners for sure. And but some traditional company will be losers. So yeah.
So it does push innovation, of course. When there is crisis, you have to survive, and you survive through agility, innovation, creativity. But in general, for the whole environment, I don't think it's good.
In today's economic climate, does the EU still function as a strong single market?
It's a big question, so it's more a question for Valentine than for us, I think. But I don't know. But what do you think?
No, not really. Not really. It is better than without the EU. So obviously, it's much more single market than without the EU. But it's still not synchronized enough. So there are a lot of steps that have to be made. But if we rephrase the question. As a Bulgarian, is it good for us to be part of the European Union and as much integrated as possible? Absolutely, yes. Like, undoubtedly, yes.
Yeah, the question is that, I mean, I recently moved to the UK. We have a big business in the UK. And really, we can see a difference between the UK before the Brexit and now. I mean, it's a disaster. So, really, it's stronger to be together. It's stronger to have a big and large Europe with countries that sometimes are a bit different. But at the end, that if everybody is aligned in Europe, it makes us as big. I mean, as a powerful group. But on our own, it's very difficult. So definitely, Europe is very important. So it's very important to be able to be part of Europe for sure.
So what are the opportunities for cross-regional partnerships in an environment of political and economic uncertainty? How do you approach these kind of partnerships?
There is no way without them, especially in the region. The region is so small that unless we look at it as a single market and try to, even if it's not a single market, try to do things, make actions, make business strategies that unite it somehow, it is really too small from all the perspectives. So we have to somehow make it one market.
We'll take some more questions from the audience. Pierre-Antoine, do you think IBAN First can become market leader in 5 to 7 years?
Yeah, actually, yes, definitely. Even before, actually, 5 or 7 years, it's a long time. If you look at where we were like 5 years ago, and if we continue to grow the same way, so 5 years ago, it was in 2020. In 2020, we were doing like something like 8 million euro revenue, and now this year we should do around 100 million. So it means that we multiply our size almost by 10 over the period. So if we continue like this over the next 5-year period, we could multiply our size by 10 again, meaning that we could do like 1 billion euro revenue company and being definitely like a market leader. But now what is interesting is that actually we are not really competing with banks. I mean, we want our client to keep their relation with the bank. We do something a bit different than the bank. So on what we do is really to help companies to facilitate all their experience around international payment. In a typical bank, the payment on the foreign exchange are separated. So you do the foreign exchange with the dealing room, and you do the payment operation with the another part of the bank. So if you are an SME, actually it means two operations, which is a pain. And if you are SME, you want to do something simple. You just want to pay your provider on the other side of the planet in another currency. So you have to do the two operations at the same time. You want also to have a lot of features to allow you to follow this payment, to see where this payment is when you pay your provider, when your provider is going to receive this money. You want to have specific rights, signature rights, when you do those payments, to give those signature rights to somebody in your company. You want to do a lot of things that actually, which is all those features is not really the job of a bank. So at the end, we are client of a bank. So we are using the system of a bank. So as IBAN first, so we are using price coming from different banks. So the banks are still here, but company like us are providing something different, and we think that in the future, like most of the company will use company like us to do cross-border payment, because it's more logical to do cross-border payment with us than with a typical bank. At the moment, 95% of the market is owned by banks, and 5% of the market is owned by us or people like us. The shift in the future will be more like probably almost the opposite, like 90% of the market of the company will use alternative to bank for those specific operations. So if we believe in this vision, and it's actually the vision we have, yes, we will be a market leader, or we will be actually a company that will be really bigger than what we are today. So, yeah.
You do not compete with the traditional banks, but how about other fintechs? Because here Swavev asks, many SMM firms report Suddenwise, Revolut, and Pioneer Blocks. How does IBAN First ensure account stability for digital businesses?
Yeah, I mean, there is competition. We are not the only one to do that, but actually the market is really big. Again, this market is trusted by 90%, more than 90% by banks. So actually, we are not the only one who wants to help the SMEs to do those transactions. And we are not the only one to really believe in this vision that it's more rational for an SME to use a specialist that is not a bank to do those kind of transactions. So yeah, it's a big market, and we are okay to share it. So, but at least here, and in some countries, and we believe, for example, in Romania, that we can be number one. So yeah.
And Elena, Robert is asking, Musawasoft started as a Bulgarian company first servicing US companies. How did that start, and how was the first client found?
Okay, that's a good question and a long story. I'll try to make it short. But it was friends of friends, and it's a nice story. I was graduating, or about to graduate from university, when I met my co-founder, and the whole thing started with a question from him: do you know how to make a business plan? And I said, I studied that at school. So that's how it started. And then he had some friends in Silicon Valley, Bulgarians that were working in some startups there, and that was the beginning. That was 2000. 2001 was the dot-com crash. I still say the biggest crisis in the IT industry. So we lost all our shiny US clients. And then we had another story. Again, friends of friends who knew friends, and that's how our next big client came. But it's a really long story. It was a classmate of mine who was a roommate in Amsterdam with a guy who knew the current, at that time, world champion in poker, who was a friend with a US senator who wanted to build a poker site. And at that time, there was just one. The US senator was 150 years old, living in Hawaii, his happy life, but he wanted to invest in that. And it was super technology challenging thing. So we built it for a year, and that was our biggest client at the time. At the end of the day, it was a project that never started running because the senator decided he's much more interested in his peaceful life in Hawaii. But we had another very, very small client at the time, a Norwegian company, which was bought by IBM. And IBM came to assess us as a supplier of this small Norwegian company. And we, I don't know why, became a supplier of IBM. I don't know why, because at that point we were based in an apartment building in Sofia. We had servers in our closet and a backup server room in the toilet. But we became IBM supplier. And then we moved to a decent office, and from there on, it's history.
And since I asked Pierre-Antoine for the next 5 to 7 years, where do you see eJoy and IO.ai in the next 5 to 7 years?
Okay, so these are some of my philanthropic initiatives, and I'll be investing much more time in them and others in the coming years. So I see them developing, being more and more international, and bringing together the brightest minds of the future together. I believe that's the way to build the future, to invest in our kids. And I believe that apart from opening them for technology and competition, it is very important to talk with them about values, and that's a big focus for me.
And Pierre-Antoine, there's another question from the audience. What is your ideal customer profile?
So ICP. ICP. We invented this name of SMM. So there is SME, small and medium enterprise. It's what everybody's using. On us, we are talking about SMM, so small and medium multinational. So this is our ICP. So it means it's a small company that is facing complexity, that is doing a lot of things that are multi something. So they are multi-currency, multi-entity, they have multi-users, they are in multi-countries, but they are still small. So if they want a solution from a bank, they have to go to the enterprise offering of the bank, which is not a perfect fit for them. And then they can go to the corporate offering of the bank, but then the corporate offering is not good enough for them neither. So it's why we invented IBAN First, is to for those companies that are special and that are multi everything. And there are plenty of those companies actually here and in Europe. So this is our ICP. Yeah.
I think what you're actually doing, you're giving simplicity to the client, and I love that. And the other thing that I'm very curious to see how it will develop, you're pushing also the banks, like the dinosaur banks, to change. And a question, how do you see this coming? Do you see the big banks, the dinosaurs will change so much that they can become competitors of your simplicity?
No, because again, I think we are not doing. It's not a real competition. I think they lost already, so they are not. No, but they lost. But the big bank, they are interested by big companies and big business. It's not something what we do. So big business, they want balance sheet, so they go to the bank to get a balance sheet. They go to the bank to have a relationship with investment banking part of the bank. They go to the bank to have a big financing, for stuff like that. But for pure payment transaction, and when you want a real just technology partner to help you, you don't go to the bank. You can go to us. And to your point about simplicity, it's really the vision also since the beginning of the company. I think I had a symptom of ADHD or something like that, and because for myself, it's very difficult to concentrate on something that I'm not interested in. So, for example, coding a payment, for me, it's almost impossible because it's long. You have to type the IBAN, you have to type the currency, the amount you want to pay. Then you have to connect with a two-factor authentication and to put a code and then another code, and it's a nightmare. And it takes like 3 minutes doing something boring. Very often in the past, I've done mistakes myself doing it. And actually, my first job, it was also a Crédit Agricole long time ago in the back office. I started in the back office, and I was doing so many mistakes that the reason why I was able to go to the front office and to have a better job, actually, because I was a nightmare for the people in the back office. So everything since start was the idea of simplifying the life of our client, and because I really don't like things that are not simple, and I don't understand why a payment should not be simple. So it's the center of the value proposition. It simplifies the life of our client. Yeah.
Good luck with that, and I think you have it already, as you said.
Yeah.
I left 5 minutes for my favorite part of the discussion, the so-called the rapid-fire questions. I would ask you for swift 20-second answers for a briefly, more personal discussion. So let's begin. What's the biggest misconception about doing business in Eastern Europe?
For me, there is no difference by doing business everywhere. I mean, when you want to do business with smart people, you can do business everywhere in the world. For me, it's the same. Sometimes there is more difference inside your own country with people that have the wrong mindset than doing business far away from your country. So, I mean, there is no difference between, at least in our company, in IBAN First, the team we have here are the same mindset, same people than in Italy, Spain, Germany, UK, and so, yes, my
Elena?
We both answer?
Yeah.
Okay. I would just rephrase. I'd say the misconcept is that there are hard borders. There are borders of the countries and even regions, but at the end of the day, it's about smart people, it's about value, it's about global competition. Even when you're local, you still have the global competition.
One piece of advice you would give to an entrepreneur expanding internationally? Just one piece of advice.
Do it.
And be bold. You're there.
And the best piece of advice you have ever received?
Mine was very recent, actually. If you have the time, you have everything. And it took me some time to realize how smart that is. But if you have time, you have everything.
What was the biggest advice you've received?
I think the biggest advice is do not listen to advice. I mean,
And then what's the most unexpected business lesson you've learned from another culture?
For me, that's the American fake it until you make it. And the underlying of it, so many people and so many companies are faking it, that if you have a substance, you're far much ahead and you have to take advantage of that.
Actually, it's cool what you say. I believe that in that also. So I'm French, and in France, actually, we have a lot of very good startups, and that have a lot of substance, that are doing very intelligent stuff, but they don't have enough this American spirit of fake it until you make it, and it's a shame. Sometimes you see like totally empty shell in the US of people doing stuff that saying stuff that doesn't exist, that are able to raise a lot of money because they are good in selling a story. In France and in Europe, sometimes you have people with deeper ideas, but they don't have these capabilities of doing this fake it until you make it. So yeah.
If you could have dinner with any historical business leader, who would it be? Or historical person, who would it be?
Margaret Thatcher.
Great.
Good one in this current situation, I'd say.
Yeah, we need Margaret Thatcher in France and in other countries. Today, I think, me, it would be Napoleon, because, yeah.
Okay, not a business leader, but a leader per se.
Why Napoleon?
Because, we are in 10 different countries at IBAN First, and Napoleon, he was running a business also, and he was probably having more countries at IBAN First, so I think I would like to ask him advice, even if I don't listen advice.
And what's one decision you wish you had made sooner?
Sometimes it's firing people, so and sometimes it's when you have the wrong people in your team, and if you very often I take or it's difficult to take the decision of firing somebody quickly. So, but it's a decision actually you should take quickly if you want to. Because it's good for the business not to have the wrong people with you. So.
I thought I'd say I'm not sorry for any of the business decisions that I've made, but this one is a good one, and I agree. They're ungrateful people, they're people that lack integrity, they're people that obviously are harmful for the organization, and sometimes you just want to believe in the good of people, and you keep them for too long, even though you feel that's not okay. So I agree with you on that. Maybe we're too soft Europeans.
What's the biggest sacrifice you've made for the sake of business?
Me, zero sacrifice. So I think it's funny when I see people working about work-life balance. I think I've got zero balance. So I'm just working all day, all the time, and all night and all weekends. But I don't do any sacrifice. I do it because I like it. So it's no sacrifice. So, and if at some point I don't like it anymore, I will stop doing it. So I don't think I've never done any real sacrifice actually.
Same with me. I'm in peace with the impossibility to maximize business, philanthropy, family and friends. I'm putting on the first place and as a priority family, but I know I cannot maximize ever the three of these as much as I want.
What's one habit that makes you more productive?
I listen to people a lot. I don't follow, but I listen a lot to people. And I adjust what I heard from them for my purposes and for my ideas. And that helps me a lot, talking with people.
I play tennis. Yeah.
That's great. And how do you unplug after a stressful day?
You play tennis.
Tennis.
Same.
I love going to the mountains, which doesn't happen every day, but I love it, and that's my total relaxation, going especially to the Rhodopes Mountains in Bulgaria. But otherwise, I have a favorite philosophy, which I believe in. If you do something which you don't like, that's stress, and if you do something that you love, that's passion, and I love the things that I'm doing.
What more greater thing to finish our discussion? Do the things you love, as these great people here on the stage are doing. Thank you very much for this discussion. It was very inspiring.
Veronica, Pierre, Elena, thank you very much for this panel. We'll go to the next panel, the new rule of risk, navigating complexity in a volatile world. I'd like to invite here Dina Temelkova, Executive Director, Telelink Infra Services, Langmar Peter, Chief Investment Officer, STRT Holding, Dragoș Dinu, Senior Non-Executive Board Member, Sunway Pharma, and Andrei Gemeneanu, Co-founder and Managing Partner, Morphosis Capital. Please welcome. Andrei, please welcome. I will take my place. So we have, let's say, almost 1 hour. First of all, thank you very much. If you want to present yourself and your company, what your company doing, and let's say the biggest advice from your life in business terms. So, Dina, it's your turn.
Okay.
If you want to take a microphone. So, what is Telelink Infra Services?
So Telelink was founded 21 years ago in Bulgaria. And then we opened markets in North Macedonia, Albania, Germany, and UK. Currently, we operate in these 5 countries. But we started as delivering services for the telecom operators in Bulgaria, both for wireless and for fixed networks. And it was a very good business 20 years ago. This business still continues, but it's a legacy for us, and it is not so much interesting, thrilling. It's a very hard job. It is the dirty job, the digging, the dangerous job, because you need to climb on the high towers. The locations are everywhere in the country, in the high peaks, in the mountains, some crazy locations. So it is also very difficult to find the people to do this job anymore, because we need a lot of alpinists, some special skills. So this is our core business, and this is how we started. We have this business in Germany and in UK still going very well, working directly for Deutsche Telekom, for Vodafone, for some very big telecom operators in the UK, under the big companies like Nokia, Huawei, with direct contracts. Then we started adding additional businesses to the core activity of the company. We started doing building automation and everything which is related to a smart building. And this is a very nice story, because we had some great projects in Germany for the factories of Audi, Mercedes. We did some of the biggest hotel chains, all the systems you need in one big hotel, which should be certified according to their standards. And we need a lot of electrical engineers, civil work engineers, and we share resources for both business lines that we have for these directions. And then within the years in Bulgaria, we started to work for many government projects for critical infrastructure. And currently we have ongoing a very important one contract, which is for the video surveillance of the Bulgarian-Turkish border. This was very important to have this contract signed in order Bulgaria to be entered and to get access in the Schengen zone. So we are doing the last 100 kilometers without any surveillance on the border. And this border is the biggest and the huge European border. This is the door of Europe, and all the immigrants go through this part. So we are doing some very important job, and we are very proud with this. Also, we are delivering some special drones for border police, like almost like helicopters, landing and going off the big coast ships, which are doing the sea border security. We did also last year the Tetra network for Ministry of Interior, and some very interesting projects. But the most interesting story, and the thing that I want to talk further with you guys here, is that We changed the direction of our company. The last 2 years we became and we are focused on the energy efficiency story, and we are working as a full EPC contractor. And we had this opportunity because we worked so well and for so many years with the telecoms. So they trusted us as integrator and as a company that can deliver always what was promised. So we started first with the telecoms, building some PV plants for them, then adding battery energy storage. Then we expanded this business in the other countries as well. We have projects in UK in this direction, and etc. etc.
Okay,
so it's a big journey.
So it's for sale the company, because Andrei, I think after listening your presentation, think can put some money. So how big is the company in terms of turnover?
So this year, only for Bulgaria, I have 120 millions. But these are contracts which just started, so next year it will be easily 200 million, because these are
200.
2 years.
So double the business.
But this is only Bulgaria. If I add the other countries, it is much more. So this year 150, and next year it will be probably 250 or 300 million.
Okay, so we pass to Langmar Peter. What is STR Holding doing?
Basically, START has two business arms. One is executive education. Only last year we have trained 3,000 entrepreneurs, business owners, mid-level managers out of Hungary and the region. At the moment, my colleagues are also in Romania giving a 3-day workshop in a different city. So we are trying to expand our education activity in the region. And on the other hand, we are a venture capital firm. We invest in early stage technology companies. We usually give the first tickets, and we are mostly active in the region. And we have, at the moment, roughly 100 portfolio companies. And of course, there is a strong synergy between education and investment, because for the portfolio companies, for the founders, the management, accessing education is a way of de-risking those actually quite risky early stage investments. And I think what makes it special is that the company has been co-founded by former tech entrepreneurs. We made our exits, we started to invest as angels, and then we joined forces and want to scale up a regional early stage investment vehicle. And we have chosen, after raising money from fellow entrepreneurs, to raise future capital on the public markets. So we are a public company at the Budapest Stock Exchange. And by doing so, we don't only access capital, but basically we diversify this asset class for the retail investors, because we give them liquidity and we give them a lower barrier of entry to invest into the technology sector.
How big is the business, all the business?
As I said, we have 100 portfolio companies. So this business is about the assets under management and not about the yearly turnover.
And the asset under management, it's around 1 billion, 2 billion, 3 billion?
No, it's way below that. We are early stage investors, and we started this activity 3 years ago. So what you need to imagine that we invest the first few €100,000, and then we follow on in the later rounds of these startups. And our investment horizon is more than 10 years. Because startups from start to exit take quite a long time, and especially if you are there to focus on Central Eastern Europe, where usually these processes take even a bit longer.
Okay, thank you. Andrei, if you want to take the microphone, you have also...
Peter, I wanted to congratulate you because I've been interviewed by Christy many times. He's an extremely resilient journalist, and it's the first time that I see somebody being let off the hook in terms of giving him the numbers and the facts that he's after. So I have something to learn from you. Thanks so much for inviting me to the organizer. It's a brilliant event. It was great to see the first panel and the story of Pierre-Antoine. I think entrepreneurs have an energy, and founders have an energy of their own They are a particular breed, and it was fantastic to see that. Morphosis Capital is a Bucharest headquartered private equity firm. We invest now from our second fund, which is over 120 million euros. We really do, I think, what's in the title of this panel. We are trying to enable CE-born companies to expand internationally, and as we like to say, to become national and ideally regional and international champions. That's really what we wake up in the morning to do. We had a first fund that was focused on Romania only, from which we invested in 6 companies with a focus on health and wellness. And now, as I said, we're investing from our second fund, which has a regional strategy, so we invest across Central and Eastern Europe. We made 3 investments already from our second fund, 1 in private education. Interestingly, we're looking to consolidate the private education market in Romania, a second one in retail, and a third one in a Bulgarian company called Endurosat, which we are very excited about, and Dina seems to agree, which is reassuring, given that we've done it already. So that's us.
Okay. Dragoș?
So Sunway Pharma, 12 years of history in the nutraceuticals market, food supplements, let's say. But basically the company was acquired end of 21 by 2 private equities, and everything changed. Meaning we are now operating in 10 countries in the region, and soon we're going to be also in Slovakia and Greece, so 12 countries in the region. We just acquired, I think, number 1 food supplements in Bulgaria a few months ago, Aviron. So now became number 2 in Bulgaria. And also we acquired a company in Serbia 2 years ago. We are number 2 in the Serbian market. And through the Serbian entity, we reach all the ex-Yugoslavian markets, meaning Bosnia, Montenegro, Macedonia, Albania, and lately 2 partners, Croatia and Slovenia. And the main goal of the company, in fact, is to cover the entire Central and Eastern Europe in the coming, let's say, 2 years maximum.
Okay. In this new context, with a lot of geopolitical tension, volatile inflation, interest rates, so on, what are the top risks your company faces when doing business outside?
Can I start?
Yeah, sure.
If I have the microphone.
Yeah. You have operation Bulgaria, Serbia, and a lot of countries.
Yeah, it was incredible because we just discussed it at the table. You know, in Serbia, you know, the current situation with the
political situation, yes.
Bulgaria, a round of discussion with the government in the last years. Romania, don't talk about the elections and everything. So the good news is that part of the member of the board, for example, they are starting their business careers back in the 90s. If you have been a businessman in Romania in the 90s, you're going to be a businessman in Romania in whatever adverse condition around the region. It's not really difficult. At the time, it was difficult. Now, is you just have to adapt. One thing is for sure, the Balkans culture, it's almost the same. Because our business model, for example, is based on medical detailing, promotion to the doctors. We are promoting our products as complementary treatment for the main prescription drugs. And the profile of the doctors in the region, quite the same, which is a huge advantage. But moving through the Central Europe, we have to adjust our model because the access to the doctors, it's becoming more and more difficult in the Czech Republic. The same if we want to reach the Western Europe. So now we are looking to an adjustment of direct-to-consumer type of model, digital also we are adding. And yes, navigating through these times, it's about the people on board. Yeah, it's about the profile of the board of directors, the profile of the top managers, the profile of their teams.
Andrei.
Well, listen, I like to say that kind of the old paradigm was that you have stability in Western Europe and volatility in the East, but that at the moment, really, you have volatility everywhere. I think this is the new normal, a bit like Dragos was hinting to. And I think in our part of the world, at least, we have volatility with growth. And obviously, we would much rather take that. At the end of the day, in private equity, we are here to create opportunities irrespective of volatility, or even at times, really to create opportunities from volatility. I'll just give you an interesting data point. If you take global private equity returns between the year 2000 and year 2023, on average, private equity funds have generated a net IRR, this is a global data, net IRR of 12%, but funds that were raised in 2009, 2010, and the beginning of 2011 have generated double that. So at the end of the day, what we are expected to do as professional investors and what institutional capital expects of us is really to create opportunities in volatile times. I had a boss in my past corporate life that used to say something that I liked, and it stayed with me. He said, "Never waste a good crisis." That was his mantra. So yeah, in short, there is volatility. There is volatility in the region. I think in particular Romania had an important turning point, and I think we have turned it the right way, at least in my humble opinion. Our job is to continue to deploy capital and create opportunities.
Dina?
So for us it is the differences in regulations, policy instability, very big one, supply chain disruption, especially in energy sector. This sector is fully dependent on the supplies from China. And the third one, of course, I agree with Andrei, the political and macroeconomic volatility, all the inflation, FX risks, SWOR decision-making, the tender, the public procurement procedures, the EU funding, and I have a very good one, a very good joke on this topic I want to share with you. In CEE, doing infrastructure without risk management is like building a bridge halfway across the river and hoping the EU funding covers the rest.
Yeah, sure.
This is absolutely valid for Bulgaria. All the big infrastructure projects which happened were with the EU funds. And now the boom that we have in the energy sector is also related to the EU funds. Due to the political crisis and instability and having 7 temporary cabinets, we were delayed with all the reforms and with the accession and getting the money from this sustainability and recovery plan after the COVID pandemic. So really at the very last mile, for 1 year until the end of the deadline, we need to implement and do the job which the other countries did for 4 years. But thanks God, at least some applications were successful and some money are insured and they are on the table. And the energy sector in Bulgaria is booming because of this, because billions are on the table for the investors to get like 50% grants, having battery energy storage. And this is one of the big topics now in Bulgaria.
Do you find engineer, because Dragos said that it's not enough doctors?
We have the same problem. We don't have enough engineers, enough civil works, constructions guys, and we started to import guys from all kinds of countries in Asia. And I still cannot say if this is sustainable and if this is successful, because I still don't have enough statistical data, but there is a very big business in Bulgaria for agencies importing these workers.
Yeah, like here in Romania.
Yeah.
Peter?
Looking at the various...
You lacked Your problem is the teachers, yeah?
Sorry?
Your problem is the teachers, the professor.
Well, in executive education, I think we can find the talent to work with. But when it comes to a portfolio of 100 companies with a wide variety of activities, the challenge they face is that they enter to a fragmented, over-regulated European market, which is way better as it is without the European Union, but their growth is limited by the overhead created by each and every country's different regulation. And I think that's one of the biggest risks for European startups focusing on the European market. And I think some deregulation needed there. And some segments like education is not as deregulated as maybe the fintech sector, where IBAN First can operate as a Belgian company all around Europe. Another aspect is that I believe that the current environment with the changing behavior of the United States gives us an opportunity here in Europe to build tech companies primarily focusing on serving the European market. And we need to build up our technology capacities because Europe is behind in many ways. Now it's an important opportunity we should live with. And within the European Union, I truly believe that our region, Central Eastern Europe, has a big chance to outgrow its size and become more important. Just we need to ensure, just as you rightfully said in the joke, that we regulate our life locally in a way that the other half of the bridge can be built.
How you see in this context your business?
Our purpose is to help regional entrepreneurs because we want to live here instead of fleeing to Western Europe. And I believe that we can ensure that by giving chance to more entrepreneurs to build businesses, proper businesses, not growth-seeking businesses from Central Eastern Europe. And we bet on this region. We invest heavily in these entrepreneurs. And I really hope that politics is not screwing it up.
Dina, the future. You mentioned something, you have a lot of order, okay?
The future.
As Kane said,
in general,
in the
I
future,
believe
all will
that
be
the best
dead.
is yet to come. So I see very big and very good potential in front of us, related also to this energy sector. So the owner
despite all this volatility problems,
despite even this is the opportunity exactly for this. We all know what happened 1 month ago in Portugal and in Spain, when there was a huge outage of the electricity and millions of lives have been affected. So this happened because the grid was not balanced, and it is like a Lego effect, like a domino effect. When something is wrong, then it goes very easy to the next, and we saw that it goes to other countries. So Europe finally has to wake up, and I know that some guys in the EU commissions and on all kinds of European levels, people are thinking what to do in this direction, because it is clear for everybody that the Chinese guys and companies are dominating over this sector, and Europe needs to do something in order to have stability. So talking about this, the owner of Telelink invested in another Bulgarian company, which is called IPS, who is working for 30 years in this domain, producing inverters and some specific grid solutions. So these guys achieved great things because they have references in the worst places on the planet, like in the deserts of Saudi and like in Antarctica, where the climate conditions are severe. So their equipment is working brilliantly, which was the reason why we invested in this company, because they're very smart engineering and R&D guys. So they invented their own solution for battery energy storage, which is different than the classical solution and what is on the market. So we just came back from Munich, where was the biggest conference for this sector, Intersolar. And I was there, and I saw what was the reaction of this sector. And now we are discussing with the big European companies for technological partnership. And even more, we already applied in the EU funds, in the Innovation Fund, for grant to open a big factory, because the production line that is operating now and that is existing cannot cover the needs only for the contract that I have signed. So we need much bigger production facilities and operation. So very soon I hope that Bulgaria will be able to look in different way in the map of Europe for energy and for battery energy storage. This is shortly, it's a longer story, but I wanted just to give the essence.
So you'll give energy to all these guys from here. Yeah, most welcome. Very expensive energy. Andrei, the future.
Well, the life cycle of a private equity fund is typically 10 years, and you usually try to use this time to play the economic cycle in your favor. So you try to, and that's the beauty of private equity, that's why it doesn't have the volatility that you typically see in public markets, because you can be patient in deploying and you can be patient in exiting businesses, and that's what we try to do. I mean, for us as Morphosis Capital, looking at the future, I think we're here to be cautiously optimistic always by definition. We started expanding in the region, and that's essentially a new chapter for us. So we're very pleased with the investment we've recently made in Bulgaria. But we want to continue to expand in the region. I think we have a good grip on the Romanian market. This is where our roots are. But the regional chapter, we're at the start of it. So we're kind of diligently, but prudently at the same time, we're embarking on the journey. At the end of the day, even in our business, if you think at the practical level, a private equity fund portfolio is made up of 8 to 10 companies. So that's the name of the game, to find 8 to 10 high potential. I wouldn't be able to do what Peter is doing, dealing with 100 investments. That's a very different niche in venture investing. But in private equity, where you deal with more established, more mature companies with a clear route to profitability or proven profitability and proven business model, it's about identifying 10 or so companies that can indeed expand internationally. So yeah, we're going to stay the course and continue to expand across the region.
Dragoș?
Yeah, I think we're going to look strategically and tactically, because, when we acquired the company back in 21, having private equities as shareholders, for sure we build a plan for 5 to 7 years. After that, the war in Ukraine starts, so we moved the plan from 3 to 5 years. After that, the Trump era started. We moved from 1 to 3 years. And now I think the best tool is the rolling forecast. Yeah, we are working with the rolling forecast because you never know what is happening tomorrow. This is the tactical part. The strategical part for us is a clear one. You don't have a European model in nutraceuticals, which is tackling the doctors, the consumers on both channels, direct to consumer, traditional and digital. So what we want to build, and we are working on it right now, it's to build these three pillars for our business, because it will enable us to move the model around Europe. The future, it will be to enter in Western European countries, hopefully with the current shareholders, if not with the next one.
Rank top 3 challenges that you face when growing your business internationally. 3 challenges when you go outside.
I think first of all, it's the right people.
To find the right people.
The right people with the right market intelligence, because it's critical at the beginning. The right executive team to manage different cultures, different geographies. The resources, meaning, because for example in our case, it's almost zero debt. We developed this business using our own cash, not even the shareholders' cash. Yeah. So having the resources to expand the business in the region is critical. I will prefer to have debt because we're going to increase the speed. And now we are working on this subject. I think this was number 4, yeah?
Only 3.
3?
3.
So it's enough.
Well, listen, prior to returning home to Romania and starting Morphosis Capital, I worked for over 10 years at the global level, indeed driving international expansion. And my simple conclusion, which unfortunately I would say applies consistently to our current activity at Morphosis, is that expanding internationally, it's always going to be tougher, it's going to take longer, and it's going to be more expensive than you plan. So I think, you know, I'm yet to hear somebody that said, I embarked on an international journey and it happened faster, or it was cheaper, or whatever it may be. So I think, first of all, it's really about kind of planning properly to the best of your ability. I think, secondly, having some reserves, because things will go wrong. So I think
financial reserve.
Financial reserve.
Or human resources to change the people, or what?
I'll come to the talent element in a moment, but purely from a financial perspective, I think if you think that the international expansion is going to cost you 50, make sure you have 100, because it's quite likely that it's going to cost you more, and you need to make sure that either through investors' capital or your own funds, you can weather the storm and stay the course. Because, you know, at the end of the day, the worst thing that can happen, to go with Tina's a joke, is to only be able to build half the bridge. I think that's a really unfortunate situation. And then the third element is really around talent. Again, we've done it at times very successfully, in other times slightly less so. Your ability to recruit top local talent, your ability to sustain that cost base, your ability to be ahead of your cost run rate, your ability to be self-sustaining in international market is really challenging.
When you enter in the conclusion that it was a wrong decision to go outside or to buy something, because you cannot put a lot of money.
Well, listen, at the end of the day, the private equity and venture capital business is about taking risk, and I think we need to be prepared to do that, and we need to have, while of course we're trying to the best of our abilities to mitigate risk, as I like to say to my team, we're here and we're paid to take risk. So I think, you know, you need to do it. There are moments when I think it's important to be rational about things and to potentially cut your losses and retreat to your core market. This is where, in a way, the dynamic gets interesting between a private equity investor and a founder. You know, founders, we love them because they are wired to see the upside, you know, and we rally and we ride on their energy and their vision. But by the same token, there are moments when I think you just need to be prepared to say, listen, I tried to expand this business in the UK, it didn't really work. Let's go back, focus on our core markets, and make sure that at all costs we protect the stability and the financial health of our business. Partnering with the private equity investor, it's interesting realizing now that there's quite a bit of private equity and venture capital in this panel, which means that our industry is starting to penetrate into the economy and to be in unexpected places. I would say a private equity partner is always or has to be the voice of rationality. Now that may at times may hurt or may create friction, but at the end of the day, the moment you enter a company, your interests are fully aligned with the interests of the founders, the management team, which is to make that business successful.
Dina.
Top 3.
Top 3, 5 challenges to go outside.
Regulatory fragmentation and differences in each country. The permitting regimes can be very different, and very heavy restrictions can come out of this, and huge delays, so this is very important for us. Second, I fully agree with my colleagues here that attracting and keeping the right people, the talented guys, this is very, very important. And I would add here that it is very important for each organization is to build the right culture. Without the right culture, nothing can happen.
But can you import the culture, let's say, from the Bulgaria to, let's say, Romanian or Macedonia or Greece?
Yes, you can. Okay. Yes, you can, but it is a tough job and somebody needs to work in this direction. So the bigger the company is, the more difficult this task becomes. To have a specific company culture, company identity, and when you have a business across countries, it's more difficult to have it the same in all the locations that you're operating. And the third challenge that I want to mention is the financial exposure and the risk structuring. All these heavy infrastructure projects, their life cycle is very long. The financing has to be mixed. Very often it's not only from one source. So it has to be done very smart, on milestone, on phases. So this is the financial challenge, and this exposure I would like to address.
Okay, Peter.
It's hard to continue after all of your thoughts because we agree. It's all about culture, it's all about assessing that it will be more complex than in your home market, and it's all about people. So just let me bring you my own story. Where I started my previous business 10 years ago, we became market leader in Hungary, and then we raised venture capital to expand in the region in other countries. And we assumed that we can do it more efficiently as we have developed various processes and technology to enter the second market. And we were wrong. It was 50% more expensive instead of being 20% cheaper. And of course, it screwed the whole business plan and then the expansion strategy. And we did get there to be market leaders in Czechia and then in Slovakia after Hungary, but it was way more costly. And it all boiled down to people, because we were unaware how much it matters that we are less embedded in the Czech or Slovak technology ecosystem, and we haven't had those connections to find the right country manager, to find the right sales representative who can take us into the right clients, and so on and so forth. And that boiled down to cost. And another aspect about culture, I believe that if you are ever willing to leave your country, then you should have that in the DNA of the company. For example, never write anything in your local funny language like Hungarian, because who the hell can then onboard foreign colleagues if the way of thinking in the business is so much local? do it English first. And of course, the water cooler conversation is going to happen in Hungarian or Romanian or whatever. But like, prepare the business from the really beginning to the expansion. And if you can, then try to find ways how you can lead the growth through your product. Because if it's a product-led growth, then you are less exposed to being local in the markets which you serve.
In the end, what is your objective, your goal to your activity? To rise the company and to sell it?
At start, yes, we invest in early stage, and well, the founder is going to lead the exit at the point, and the later stage venture capital firms. And in Central Eastern Europe, I think the typical exit is to a private equity firm, and IPOs are unfortunately rare at this point.
So the goal is to rise and sell the company in the portfolio?
Yes.
Yes. Dina? The same? If you want to take the microphone? Yeah? So Teletrans is from sale, yeah?
I think at the end the goal is this one, but
if you want to put the microphone, okay.
It will take time, so for now the goal is to scale and to make a real production facility and full robotized factory in Bulgaria and in other European countries.
And you are not tired if you take some million or billion? And
I
what to do with your money?
I told you
to go in Hawaii?
I cannot answer this question now, but I have no problem with spending money, so that's easy. I told you last night that in this sector, for 2 years, a company from 100 million can become a billion company. It's for a very short period. It's just the boom now.
Andrei.
I'm only now realizing that this is a matchmaking panel, I think, by the looks of it. Listen, I think for us as a private equity firm, we always roll forward our model, and our objective is to raise larger funds. Our first fund was 50 million. Our second fund, we set ourselves the objective of crossing 100, and we are significantly above that. And, you know, for now we are fully focused on deploying capital. I think when it comes, it's probably more interesting to make a reference to something that Dina said. It's important for entrepreneurs and founders in the room to be clear where they are on, in a way, the life cycle of the business, but also on their own choices. For instance, us as a growth investor, if we hear about founders that want to, again, to use your analogy, Christy, I talk about south of France. You seem to like Hawaii, you know, whichever destination, that will always scare away a private equity investor. We go to founders and we want to see that they are extremely keen to go through another cycle of growth. In fact, we tell them that the next, let's call it 5 years with us, will be even more intense, even crazier, even faster, with even more pressure, with even more ambition than the 5 years that they may have graduated from. Just to give you a metric, for instance, in our first fund, we deployed over 80% of the capital as cash in, so capital injection into the business, and only 20% of the capital cash out, meaning a partial exit for founders. Now that our fund size has grown and the types of businesses we invest in are slightly more mature, that's probably still going to be more balanced, but it's still going to be around the 50-50. So all to say that it's really important to be clear on your motivations and to, you know, in a way, find the right avenue depending on what you're looking for. If you're looking for a growth partner, you're looking for cashing out and moving to Hawaii or whatever it may be.
Dragos?
Yeah, I think even if you are working with a rolling forecast, still the 5 to 7 years window for an exit, it's there. It's a private equity, it will look in the same things. Interesting that one of the dinosaurs banks lately approached us to discuss about an IPO. But I would say that really the IPO in these days, not because of the volatility on the markets, but mainly because of the highly dependence on the Romanian numbers still. So the company, it was founded here in Romania, something like 60% of the turnover is still made in Romania, more than 70% of the operational profit, it's here. So I think moving the numbers in a balanced situation could bring us to have this option also of an IPO. But not on the local stock exchange, on one of the regional ones like Warsaw or Vienna.
Okay. In this context, we live together. Geopolitical, inflation, war, so on. What is the top 3 afraid of you?
Okay, the war is there.
The war.
Okay, I'm not afraid about the war itself.
Are you afraid that
I was
somebody will push
I was in the army during the Chernobyl explosion then in the north, so I'm still alive. No, but the influence of the war in the business environment in the region, because we feel it. On the other hand, I see the other face of this coin. It's the post-war era in this region, meaning rebuilding Ukraine and so on and so forth. It will be a huge opportunity. After that, I don't see really a risk for the region, but I see many risks in different risks in every single country. We mentioned here lack of talents. You have to import some of the people. And we are not talking about our team only, we are talking also about our clients, because the doctors are our clients. If there are not enough doctors, the access to the doctor to promote your product, it's just narrowing. So for our business model, these are the main risks. And the supply chains. We feel it in the 2 years after the pandemic. We feel it 2 months ago, once again. Yeah, because most of the raw materials in our industry are coming from India and China. Even though we are producing in Romania, in Slovenia, in Poland, the raw materials are coming from there. If you have some disruption in the supply chain, it will affect your business.
Dina, you have the same problem, the supply, the raw material.
The raw materials, yes. I was thinking in another direction. I believe this is valid for all our countries. So all my active working life, we were living in turbulent times. Nothing was normal. So we are used to work and survive in this environment. So for us, we expect all the time delays, changes, political instability, cost increase. If everything goes by plan, then we start to think what's wrong if everything is by plan and within the timelines and the expected results from the very beginning. So we are used to live in times of changes, in times of turbulences. I don't think that we are afraid. Even one of our company values is being fearless. So you need to be bold in order to do some great things and great projects to have big impact on the society, which is one of the goals.
But
that
do you have
having.
enough money to be bold? At the end of the day, it's a matter of money.
We are successful finding the money, and I believe we will be able to find more and more money.
Andrei, your nightmare.
Let me tackle this from a different angle. We had a conference yesterday of the Romanian Private Equity Association, and we had a gentleman from EIF, European Investment Fund, Uli Grabenwarter, I think if I pronounce, I just checked to make sure I get the name right. He's a very senior officer, investment officer within EIF at the group level. And in a way, he launched to all of us in the private equity and venture capital industry the following call to action. He basically said, we just cannot afford the opportunity cost of not innovating. So I think for me, you know, yeah, when it comes to fears or things that would keep us awake at night, I think probably with my Romanian hat on, if you were asking me 2.5 weeks ago or whenever that was, I think I knew exactly what to answer. There was a very specific thing on the political side keeping me awake at night. But other than that, we need to lean forward. We need to go for it. We need to innovate. We need to invest. We need to support entrepreneurs. And in a way, if the kind of the rallying cry of the first panel was, you know, just kind of go for it and be bold, I think from a private equity and investment perspective, we would say be bold and be grounded at the same time. So yeah, you know, nothing really at the moment keeping me awake at night.
Please.
I fully agree with Andre, because just look at the global perspective. The US was somewhat behind China in innovation over the last decade, but Europe was behind the US somewhat in innovation over the last couple of decades. And Eastern Europe was somewhat behind Western Europe in terms of innovation over the last couple of decades. That cannot go on. So we have to invest in innovation, and that's a long-term bet. And to make long-term bets, we need political stability. And, well, luckily, Romania turned out to be a safe and prosperous place in that sense. But Hungary or Serbia or Slovakia or Poland dances on the edge. And if the region is not stable enough, then no matter how much EIF funding we get, it won't be worth to invest in this region. And that's the biggest risk. It's not okay when well-established Central Eastern European businessmen, founders, are relocating just because of the political risk. That's not okay. That's loss of talent, that's loss of opportunity. And I think, well, definitely that keeps me awake.
You have a question from the audience for all of you. What's your current AI adoption strategy, and can you share relevant use cases or area where you're seeing impact? Short answer, Andrei.
Well, listen, it's a very good question, and it's something that maybe doesn't keep us awake at night, but you know, it's something that we're thinking how to tackle. At the end of the day, I think in pure investment terms, I think in the future, all of the background analysis will be done by AI, and our job will be just to make investment decisions. I don't envisage that we would ever delegate the investment decision per se to any form of artificial intelligence, but we have embedded this in our process, and we are trying, and I am actively trying to do more there. So that's when it comes to us as an investment firm. Then across our portfolio, things are very different because we are a generalist investor. We invest in healthcare, we invest in private education, we invest in retail, we invest in fitness, we invest in industrial stuff. So we have a wide range. There are certain sectors that are certainly exposed, and I think we have moved quickly to embrace it. I'll just give you one example, since the question was asking, and rightly so, for specific examples. We are shareholders in the second largest radiology chain in Romania, so it's called Medima Health. It's a chain, I think, as of yesterday, of 27, because we had an opening yesterday, 27 MRI, CT, and PET-CT clinics. And there, the disruption of AI in radiology at the global level is very real. So we have installed AI modules on all of our equipments, and this is speeding up the collection of images. And therefore, an MRI scan that would take, let's say, 40 minutes can take 35 minutes now. And given that this is a high fixed cost, fixed assets business, if you can sweat your assets more, you're going to run a better business and a better operation. And now we are moving into the other side of the spectrum, which is having AI-enabled diagnostics. And obviously, in a similar way in which I was talking about the fact that we will never delegate investment decisions to AI, I think we will never delegate medical decisions to AI, but the AI can significantly enable and speed up and improve the accuracy of the medical decision, just as one example, and I could have many.
Dina.
We use AI in our everyday life in most of our projects. Our field engineers are equipped with devices and they do everything remotely on different scenarios. And from our office, we can monitor, control, and decide very fast what is happening on the field. And this is part of our efficiency, and this helps us having same standards and working the same way in all our locations. So yes, we do use it every day, and it is very good for us, and it is helping. Another example is this project that I mentioned before, the border control and the video surveillance on the borders. You need a huge AI and analytics software in order to understand better what is happening on the border, if it is real or false alarm. So, yeah, different examples for different cases. But it's very important, and I'm very happy that we have AI in our lives. For example, every day, for everything, I'm asking ChatGPT, and yeah, I'm very happy.
And in Bucharest, it's still raining for today. Peter.
So among our portfolio companies, vast majority of the companies use AI, and some of them actually develop something related to AI. So we have companies where they use it in medical diagnostics, or they use it in search optimization, or in customer care, or when it comes to software development. I think B2B software was the #1 target of venture capital investors, and I believe B2B SaaS is being eaten by AI because the barrier to enter into the software market has lowered so tremendously that the competition is much more fierce, and the whole software landscape is being fully reshaped by these technologies. You see startups with 12 employees generating 100 million euro ARR. This was impossible a couple of years ago. So there is a huge shift in software development. And we try to make bets in companies which leverage these technologies well. Just to bring you an example, Diffuse Drive, one of our portfolio companies, they generate the data to train AI, and actually they pivoted into a defense use case, and they raised their recent round in the United States after we were one of the early investors from Hungary. And at start level, well, we do have lots of trainings, executive trainings for business owners, managers, how to use AI in their businesses, how to make their businesses more efficient, because if you are not keeping up, then you're going to lose, then you cannot keep the cost, and you're going to lose your margin.
Thank you. Dragoș, the last answer.
I'm the chairman of the board. I'm not really involved in an executive, but the funniest part of the AI, we used it in the last board meeting, and when we had questions at the limit, all the board members give their answers, including ChatGPT. Don't do that. It was a disaster. So almost impossible to align. But now seriously, one point is for sure, in imagistic, in healthcare, AI, it's already a habit. In diagnosis, in our case, we are teaching our doctors to use the AI tools first. And the second, now it's a new wave, because everybody, it's not Google it, it's not, the CEO is not working anymore in the same way. Everybody's trying to have his service or product on the top list of ChatGPT or Gemini or in terms of recommendation. So it's a project in itself, and the people are working to obtain such results now.
Okay, thank you very much. Let's applaud them for this discussion. I will pass the chair to Vidor Kismarton, CEO Continent Technology, for the presentation and successful case study of regional growth. So, thank you very much again. The last panel. Let's applaud him.
Good afternoon, everyone. It's afternoon officially now. Thank you for the opportunity. I was wondering if there's anybody going to be in a t-shirt before I come on stage, but I think I'm the first one as far as I've seen it. There's a message to the t-shirt. I have a young friend back in Budapest. He's a 21-year-old student, professional athlete and entrepreneur, and he has this fashion brand that he launched himself, and the brand is called Sordio, and I was not aware what Sordio means, and I had lunch with him like 2 weeks ago, and he explained to me that Sordio means filth, Sordio means dirt, and okay, what's the meaning of that? And the meaning of that was that in order to be successful in sports, in academics, in business, you need to get your hands at least dirty, or yourself dirty at one point. So I thought it's a good message to bring as a let's say, calling ourselves a successful case study of regional growth. So the story I brought here today is the story of Continest. Am I pushing the right button? Try again. I'm trying. Is the big green one, right? Oh, there you go. Now a little bit back. So we are a Hungarian SME established in 2019. Originally, we started the business in 2016, but the current entity was established in 2019. I don't think that this actually works, or I don't know how to work it, but okay, there we go. Very good. So we are based out of Hungary, and the story of Continest started, as I called it, in my first midlife crisis when I was 37, and I was working for a family office from Netherlands for 10 years. And I was like looking, okay, what's going to be my legacy? Like, okay, I can work for another 30 years, and what then? I made a couple of successful companies for somebody else, but there is nothing to my name. And then I exited that business, and I did a round trip in Hungary to find new opportunities. On the last day afternoon, I found the foldable container technology that a friend of mine and my current business partner and co-founder was already working with. And the region, this is a regional growth focused conference, but Continest is much more global because we are a CE-based company, but our global focus is much wider. So we are technically a global entity, meaning that we are incorporated in the United States, Canada, and Hungary, and we are supplying our solutions worldwide. You will see this a little bit later. What we do is temporary infrastructure solutions. So we are building containers, which is a quite low-tech industry. But what we do with this low-tech industry is that we disrupted it after more or less 60 years until since we started and before anything relevant happened to it. The disruption in the technology came by folding the box, right? So we bought a patent. I'm an economist. My business partner is a communication expert. It makes a lot of sense that we have a container manufacturing company. But we bought it from a Dutch mechanical engineer, and we patented it globally. And basically the story is that we fold the box, and by folding the box, we are cutting 80% of everything, 80% of cost, 80% of emission, 80% of storage requirement, logistics, and so on. And You can see some examples of how we are loading 5 times more of our units into any logistical platform than anybody else in the world. I also brought you a video. If it's gonna play, it's gonna be loud. So if the tech team can lower the volume, that would be great. Usually, I say seeing is believing. A lot of people don't understand how you can fold a 2-ton box in a matter of minutes. If I click again here, I think it's gonna play. Is it playing? No. Okay. Can you guys start it instead of me? Or should I click it? If I click, it just moves on. Anyway, if it doesn't start, it's not a problem. It just folds up and down with the help of any logistical platform, meaning you can use it like crane, forklifts, telehandlers, anything, and it takes roughly 3 to 5 minutes to open and close the unit. And you can repeat this routine as many times as you want. Then about how we started. This is a CE or SEE picture. This was taken in Serbia in 2017. This is very early days for us. Unfortunately, somebody from this picture is not with us any longer. But the funny point with this is that we're so desperate at this point to enter the market any way possible that we developed a trailer that could actually flip the container and take it through a tunnel in Novi Sad. So this is Serbia, and there is a festival in Novi Sad, and we wanted to get in. We didn't get the job, by the way, so we did the test that we were tasked. We didn't get the job because the local, I'm not going to call it mafia, but the local circles of interest were stronger than a Hungarian startup. But nevertheless, it showed where we are going. Okay, where we are now. As I said, we are global. South America is the only white spot, but we are in very advanced discussions with the Brazilian government at the point, and I'm pretty sure that this year South America is going to become, let's say, occupied by Continest, and then we can say that we have a presence in all the Continest. As you can see, that dot on the left, it's not a mistake. That's the middle of the Pacific. That's Maui. I will show you what we did over there in the last years. We started with Sziget Festival. I don't know if you're aware of Sziget. It's one of the largest Central Eastern European, or maybe the largest Central Eastern European music festival. There's one huge one in Cluj now that I think it's competing with it. But we started there. We were at the right place at the right time because it was also the FINA World Championship hosted by Hungary. That World Championship took all the infrastructure away from the market, and we came in and we're technically selling water in the desert. So Sziget was our first customer, and from there we started to diversify into other industries afterwards. I'm trying to push it once. Okay, a couple of numbers. We've seen some very interesting and very dynamic companies, IBAN First being one of them, growing 100% for several consecutive years. In numbers, we are much more modest than them. Nevertheless, we've been listed 18th fastest growing company in Europe by Financial Times in 2023, which obviously it's a good brand enhancement. It's not really anything more than that from our point of view. We are not going to stay relaxed because Financial Times listed us, but you can see how a hardware company coming from Central Eastern Europe with global ambitions can actually grow in numbers. One very interesting part was 2020 and 2021, the pandemic, the start of the pandemic. In 2020, we were very, very proud that it's going to be the best year of our life. We had contracts with the largest sport events in the world. And then suddenly the news started to arrive that something is happening in China and something is happening in Italy, which we thought it's BS, but it reached us very quickly, and then suddenly we had zero income for 5 months in 2020. The lucky part for us was that in 2019, we raised our seed round with a Hungarian Venture Capital Fund, and we're burning money for the first 5 months. What is even more interesting is that we went from a business plan, which was, let's say, 100 units, to 0 units, and then we pivoted back to 130% of our original business plan. The way how we could do this was we were very agile, very flexible, and we pivoted from event industry into healthcare, into medical, because you needed boxes for sample collection, you needed boxes later on for testing, and you needed testing, sample collection, and vaccination. So, for example, we delivered medical infrastructure to the 12 largest airports in the UK during the first phase of the pandemic. And that went into the Middle East, so we became, let's say, at least a semi-global medical infrastructure provider during the pandemic. And this shifted us from the event industry to the medical infrastructure industry, and then into defense as well. After 2020, when we exceeded our business plan with 130%, we decided that it's time for us to get real, in the sense that we invested in our first factory. We had to do this because the demand was growing, and we were suffering from subcontracting everything to third parties, which meant lack of quality control, lack of price, and lack of lead time. And we're in a lucky position. We found a very good location in a very good city in Hungary, in Székesfehérvár, and partially using the money that we raised in 2020, we opened our first facility. And that's one of the scaling steps, and that's from where we are considered like a real player on the market. Again, when you talk about hardware infrastructure, seeing is believing. Like, you can invite parties to your facility, you can demonstrate your capabilities, and make it much more tangible. What is also important, that we are vertically integrated, meaning that we have in-house engineering, in-house prototyping, in-house small-scale and large-scale manufacturing. So that allows us to deal with customer requests, customized customer requests, which from a business development and, for example, a private equity point of view is quite interesting, because it's always a question about how much customized projects you want to do, or how much scalable standard products and projects you want to do. But that's probably another story. In 2023, we did, in 22 actually, we entered the US market. We incorporated in the US. It was a very interesting experience. I used to work and live in the US for a while. Pierre was talking about fake it till you make it, so I'm very familiar and very comfortable with that attitude of starting a business on the fake it till you make it approach. In 23, there was a huge fire in Maui. Basically, a small town burned to ashes in a couple of hours. And 8 days later, we were on site with hardware manufactured in Central and Eastern Europe, 1 day before Air Force One landed on the island. So this is the type of attitude that I think takes a Central Eastern European company to the level that we are, and probably we're going to be in a couple of years. I talked about the factory. As I said, B2B is where we started, where we are still, but where we are seeing a huge growth. And this is where I usually say that current business environment is bad news for my kids, it's good news for my business. Because the B2G sector is exponentially growing everywhere. Us being a EU/NATO-based company in Europe, and being incorporated and having localized manufacturing in the US, it's kind of allowing us to double dip these days, because we can have made in USA products delivered for the US government, or we can have made in Europe made products delivered for the European government and users. As I said, around the world, we are very proud that we could support Paris last year during the Olympics with our foldable infrastructure, as well the UEFA World Championships. When it comes to our development strategies, is that we are entering new markets. Normally people think about containers as this box, as a logistical platform, as a cargo container. That was not the case, not our case, because we went into temporary infrastructure container solutions first. But we are also now building foldable shipping containers. This is theoretically, or for an outsider, it looks like this could be an easier market. It's very obvious to enter this market. It's not, because it's a super regulated market. Nobody wants to change anything, because you don't want to mess up anything between Shanghai and Rotterdam, for example. So it's super conservative, very regulated, and that's why we decided not to go to the big shipping companies with this solution, but to go to the last mile service providers who have the challenge to distribute and redistribute goods that are coming in from the ports. I talked already about our first stage growth policy, the fake it till you make it approach. That was 100% real, and I have no problem admitting that. Like, we're just improvising many times. We're trying to fix the plane while in flight, but we survived. We were 3 times close to bankruptcy, not because we didn't know how much money we earned and how much we spent, mainly because we're pushing our boundaries too much and assuming too much risk with our customers and having too much confidence in us being paid. But we didn't go bankrupt, which is good news. The second part is where we are now, is build a functional organization. It's quite challenging for me as a founder, I consider myself more a visionary than an operational person. The good news is that my business partner is much more operational than I am, so there's a good balance between us. And the third phase is going to be, for us, there was a lot of talk about exiting and private equity and IPOs. We are not sure if we want to exit the business at any point in the near future, but we are sure that we want to have an exit-ready company, right? So we're doing everything on a very meticulous and sometimes boredom way to be exit-ready, which means that we are scalable, we are making EBITDA, right? So we are producing profit. And very importantly, that we as founders can be put to the side at one point, that if I'm hit by the train tomorrow, the business can run smoothly. Hopefully I'm not gonna, but it can happen at any point. Couple of projects. This is still my love project. It's 2019, early 2019 in Sweden. We were contracted by FIS to build the main technical base for the Alpine Ski World Championship. Before being contracted, we've been kicked out of this project 3 times. And you know the advice of how to get there, just don't give up. Like, there's a saying in Hungarian, if you're sent out on the door, go back on the window. I don't know if that translates well in English or Romanian, but that's what we did. And it was very interesting to learn why that happened. They loved the product, they loved the concept, they were afraid of doing business with a new partner, with a new company, with a startup. We didn't give up. What was very interesting is that when we were awarded the contract, which was somewhere in October 2018, we had 50% of the assets available, so half of the assets were not existing. At that point, we had no factory because the factory was open in 21, and we had also very limited liquidities, but we still did it. Like, our team, I was in the factory on Christmas Day. You know, Pierre was talking about no remorses and like having no work-life balance. That was definitely true for us at that point. We were building containers on the 31st of December, 1st of January, but the customer got its containers on the day that we promised. And that's one of our mottos. We always deliver. It doesn't matter if it's in our backyard or if it's the other end of the world, we'll always deliver. I already talked about our commercial business. US, there was a lot of discussion about the Trump administration. How does it affect business growth, business potential? I'm sure you're all aware of the special relationship between our Prime Minister and President Trump. I can share the secret with you that we as businesses, we are not experiencing any preferential treatment at this point. We're also not experiencing, by the way, the tariffs. So at this point, we just quoted, we just shipped quite a few units, and we are running our US-based operations. By the way, this is one of my favorite pictures from this year, Victory Lane with Continental behind. It was not done by purpose, just by accident, but still, it's one of my favorites. So we scaled in the US. We are still in a very early stage, but the US market, by its share volume, it's definitely the most relevant for us geographically and also from a geopolitical point of view. After that, it's the Gulf, so it's the Arab countries. But we also did, and I'm very, very proud as a human being of the job that we did in Ukraine, and we are doing currently in Ukraine. Again, I can bring in a political topic of Hungary's PR in the context of the Ukrainian war. versus what happens in reality. I can share with you that we did, our first largest projects were done in Ukraine by US donors, US private donors, but our second largest project were done by Hungarian government funding. So we built kindergartens, ambulance stations, and other projects based on Hungarian government funding in Bucha, in Borodyanka, and some other locations in Ukraine. And we're currently supplying our units to the front lines. So actually, we're all over the country. We just don't know the location of part of our fleet because they're being deployed very close to the combat areas. So this is another aspect of what we did. This is actually the kindergarten that we built in Borodyanka from Hungarian government-funded projects. I already mentioned to you Maui. Again, it's pretty unrealistic and difficult to comprehend how you can bring hardware infrastructure from Central Eastern Europe to the middle of the Pacific in 8 days, with NATO infrastructure being involved during the war in Ukraine, right? So it's like pretty mind-blowing. I had to convince three different ministries, 3 different ministers to do this, but there was a very simple question. When, again, in the history, can Hungary genuinely help the United States, right? Physically, not with policies, not with statements, not with PR, but with real assets on the ground. And all 3, it was Ministry of Foreign Affairs, Ministry of Defense, and the Prime Minister's Cabinet Office. They said, okay, that's a simple question, let's do it. And then it took 48 hours for the NATO base to plan the flight path. We had 24 hours of radio silence because of the Russian invasion of Ukraine. So there was a NATO plane flying through Europe, but we did it. And as I said, I'm super proud of this project as well. It is the new benchmark. I consider it the new benchmark in humanitarian projects. Why? Because we cooperated with a local design firm, architectural firm, and they took in consideration, I'll try to go one back if I can. I'm not sure if it works. Anyway, there was another slide where you saw the multi-family structure of the village that we built it, which was considering and respecting the way that locals live. So we didn't just go in there, okay, here it is, take it or leave it, but we went there and we delivered something that is considering the dignity and livelihood of the locals, of the survivors. I was talking about B2G business for us. This is one of my other favorite projects. It's a NATO mission, NATO-based EU peacekeeping mission in a non-EU, non-NATO country, which is Bosnia, which is hopefully it's going to get to this status. We delivered it for the Dutch armed forces. I don't know if you're familiar. Camp Butmir is the peacekeeping mission of the European Union in Sarajevo near the Butmir airport. It was supposed to be a temporary mission. Unfortunately, it's been there for 25 years now, so it's like this temporary status is fairly long. The reason why you see those stands on the left bottom picture is because they still don't want to put anything underground, or they want to put as little underground as possible, because to keep at least the illusion of being a temporary peacekeeping mission. Middle of nowhere. This was called Saudi Arabia, but I took it middle of nowhere because this is literally the middle of nowhere. This is our largest ongoing project. I just came back from Saudi last Thursday. I'm sure you're all aware of NEOM. You heard about it. The line, the 160 kilometers long project, which is, I can share it as public information. It's not going to be built. It's going to be scaled back to roughly 1% of its original size. What is being built is Trojina. It's a ski village. It's a ski paradise in the middle of the desert, which is a pretty paradox thing to see. Nevertheless, the Saudis, so NEOM, which is financed by PIF, is building it. And we were able, again, to do, and after the Alpine Ski World Championship, this is the next milestone that I consider in our growth. We were able to get a contract with NEOM directly, so we had no intermediaries, no local representatives. So we as a CE company are directly supplying to the largest infrastructure development project in the world. It's $1.5 trillion being invested into this project. Is the size of Belgium, just for you to get the context. This is a proof of concept for Continest, and what me as a founder, what I'm already looking at is project 2, 3, and 4, and 5, and 10, and 27. And the good news is that yesterday I received from our project manager the first pictures of the next site where probably our project's going to be deployed. And this is something that we are looking, this is how we're going to scale, go there, do the proof of concept, deliver. And it was really nice for me to hear when I was on site from a German director of one of the programs that you're the first who did it in time that was agreed, in the budget that was agreed, and with the technical content that it was agreed. So, yeah, NEOM is ongoing. Other projects, we are investing into R&D quite a lot. EDF is the European Defence Fund. If I don't know if you're aware, European Defence Agency is kind of the EU-NATO ambition somehow. What is interesting from a Central Eastern European SME point of view, that there's an unbelievable amount of money available in the EDF funds for defense-related R&D. We're part of a consortium, which was a Slovenian, Hungarian, Italian, Austrian consortium. Last week we did the final testing of this simulator program that we delivered, or developed and delivered. And what is really interesting is that if you do this in the right way, it starts to be like a mushroom effect. They start popping up. So now we are invited in 2 more programs. And it's also not a big secret. It makes sense to participate because it's quite cash-rich projects. But from Continent's point of view, just doing R&D is not relevant. We are doing R&D when we can develop a product that is marketable afterwards. So just doing R&D for the sake of R&D, that would not be interesting. This project will become a marketable product, and we are already pushing it through our government markets. References in the words. Again, this is, you see the Financial Times Top 1000 here. It's relevant. At the same time, we learned it that you can have as many awards as you want. You can have as many decorations as you want. If you're not competitive on the physical market and in the financial market, we were told by the Swedish organizers that although they were claiming to be the most sustainable global sport events at that point, if we were not matching the pricing of the local suppliers, it was not relevant that we are cutting 80%. Once we matched the price of the competitors, then the fact that we are 80% less, emitting 80% less emission during the delivery of the project, that became a competitive advantage. But nobody was, and I believe that nobody is paying a premium for sustainability today in the world. Camelia asked me to talk about lessons learned during the process, and honestly, I don't know if I have still 12 minutes left, because this shows me 12.13 for a while now, but just let me know how much time I have. I stop if I have to stop. One of the lessons learned is that you're relevant if you're solving problems, right? So that's definitely our case. It's very visible how we can solve problems. I hope I gave you an insight into that, of how we are solving problems globally. The other is don't grow as fast as you can and try not to go bankrupt. That's a healthy balance. It's not easy, but especially in hardware, like IT is different. It's a different concept. It's a different world. But when you're building hardware, if you're not fast enough to penetrate the market with your own solution, somebody will catch up. We are getting the question, are we being copied? Yes, we are being copied mainly from China, which is great because it's very Chinese, so it's not really a competitive, so nobody will choose Continental or a Chinese foldable container. It's not really a competition, but it was not the Chinese who copied us first. It was a Dutch company first, and now it's a German company who copied our technology. The next question is, do you have patents? Yes, we have patents. Can you enforce them? No, you cannot, because patents are useful only as they're 100% copy of your solution, at least in hardware. If they're changing something, a little thing, then it's very difficult to enforce. Our patent is quality of product, quality of service, and market penetration speed. So that's what we are focusing on. Our Chief Technical Officer, who retired this year, had a saying, enjoy the business. So that's my other advice. That's what I'm trying to focus more and more. Enjoy the business while you're doing it. That's why I said that it was coming from my first midlife crisis. Now I think I'm entering my second midlife crisis, these days, but I'm enjoying the business that I'm building and I'm doing for myself and for our customers. Always deliver, that's another advice. We never failed on a single project. It didn't matter if we had assets, we didn't have assets. If we didn't have our assets, we took somebody else's assets and brought it. We always delivered. And then I think the other message is from our own experience, engage in strong partnerships. We could have not grown to this scale with a hardware solution globally if there were no partnerships. You will not know which is a good partnership until you enter it. For example, in Saudi Arabia, we had 2 failed local partnerships until we realized that, okay, this is our market. We have to do it on our own. If we want to deliver, if we want to do business with the largest development project in the world today, it has to be on our own account. So yeah, strong partnerships. You will fail in a couple of sentences for sure, but then at the end, you should know which is the good one. There's also a topic, okay, what were the obstacles that we faced? Obstacle was initially lack of trust in a new technology, like the pushback of the establishment, like why would you change something that worked well for so long? And the other one is disbelief in startups' delivery capability. And the first is just push as much as you can, like as we did with the Swedes. The pushback of the establishment is educate your customer. I think that's true for hardware, software. You need to educate your customer. You need to be a preacher. You need to let them know why is a total cost of ownership approach. In our case, for example, it's valid and it's relevant for them because it's not only the capex of acquiring an asset, but it's also operating that asset that will make our business model much more relevant. I'm pretty sure that watch doesn't work, or my sense of time completely screwed up because it's still 12 minutes. So I will wrap it up. Financial Times listing was the last point. As I said, for us it's a nice thing. It gave us some PR opportunities, but the real story is not being 18th on the listing, but being pushing as much as you can, always delivering, and then being there the next day and the next day and the next day. So thank you for your attention. And I was told that there can be Q&A as well. Yeah. So feel free.
Vitor, thank you very much for your present. What is the total turnover or your business?
We are currently, so in 2025, we are planning to have around 15 million euros turnover, 1.5. It can be more, but we are aiming for 1.5.
Let's say if you came back in the past, do you think you'll have the same business? Because this is a very hard business.
It is very hard business, but what I also learned is nothing good and worthy comes easy, and honestly I love it. We are doing so many fun and relevant things that I don't think I would go for anything else.
What will be your advice with Vidor younger?
Good question. As a younger entrepreneur or a younger human being? Entrepreneur. Okay. As an entrepreneur, get rid of the bad weight that you have, meaning unproductive people, unproductive projects. Like have the courage to say no faster. Get out of your comfort zone. We've been working with Dutch. Dutch have a very easy life from this point of view. They will tell you fuck off very easily in a polite way, but they will tell you. We Hungarians or Central Eastern Europeans, I want to know how you feel about it. I don't want to offend you. This should have been avoided much earlier, for sure.
From your experience, what will be the future of our region in this, let's say, new context?
So I agree with Peter that there's a lot of potential, a lot of talent. Obviously, there's a lot of talent drawn from the West. And our story is quite interesting because we are a Central Eastern European SME who did brain drain from the West to the East. And now we are growing this into a global business. And I believe that we are not unique in that way. Like, I think that there's a lot of creativity. By the way, I was born and raised in Romania, so I know how things work here, and this multicultural diversity and this you won't need to prove yourself all the time. I think that's definitely there. It's definitely an advantage compared to Western Europe. Lack of stability, lack of predictability, obviously that's a handicap, but that makes us more resilient. So I see definitely potential. Unfortunately, the geopolitical developments are putting us in a bigger spotlight, like Romania with the Ukrainian war or this region, but I'm optimistic in general.
Thank you very much. Let's applaud Vidor for this presentation. It's for sale, the company? Vidor, the company is for sale? It's prepared. Yeah. One of the conclusions is all the business present here is prepared for selling. We'll be the buyer. So, thank you very much, all of you. Our conclusion that despite all the geopolitical crisis, it's still life in business, especially in this region. We heard that there will be no recession in United States, no recession in European Union, but all the geopolitical blocs need to find money to finance their fiscal stimulus. So thank you very much for the 4th edition CE Summit. Enjoy the lunch and see we next year. So let's applaud. And thank you if you want to open, so thank you very much IBAN First for sponsor this conference, P2PR, the communication company, and the organizer, and of course Ziarul Financiar for the editorial cover of this conference.